Welcome back to the European Market Open. A minute to go until the start of cash equities trading. Here are your headlines. Jobs day in America. Investors wait for today's figures, which could prove crucial after April's historic miss. Janet Yellen faces pressure for a global tax deal by the end of the week as she prepares to meet her G7 counterparts in London. And melody maker Bill Ackman's Pershing Square Tontine is in talks to buy 10% of Universal Music for $4 billion. Let's take a look at the futures then. Good morning, everybody. European equity market futures are not suggesting we'll move all that far at the start of the European trading day. A little bit of downside, perhaps. CAC futures look a little bit more positive. We'll watch out for Vivendi and what the Vivendi share price does over in Paris, of course. A lot of focus, as we were saying all of the last hour, a lot of focus clearly on the jobs report. High expectations for what we'll get in terms of the number of jobs created. Let's get to the European equity market open then, and European equity markets are opening up, perhaps the operative word, only just on the FTSE 100, so slightly in positive territory. The IBEX also open at this early stage and also very slightly into positive territory. Like we were discussing all last hour with Mark, the focus is on the jobs report, and he was suggesting we might see some asymmetric reaction to the jobs report, perhaps the dollar and part of that conversation, and yields and real yields he told us to keep an eye on when it comes to the link between what we get in the jobs rate, inflation expectations, and the yield environment. 1.61, 1.62 is the yield we see on the US 10-year right now, so that's worth noting as we go into this jobs report, see if we get any more movement. We saw some movement, of course, on the back of the stronger data yesterday. That did seem to move markets already, so will we see with the non-farm payrolls number in the rearview mirror that maybe all of the big market moves came the day before, because we did see some substantial gains for yields and also for the dollar with that in mind as we got better data coming out of the US, and a bit of a sell-off in some risk assets also with that in mind. So European equity markets opening a little better, a little brighter than futures had suggested, that as US futures continue to improve just slightly, fairly flat though this hour. Investors are braced for May's non-farm payroll report today. The consensus forecast is for a gain of 674,000 jobs in the month. It comes after April's number saw arguably the biggest miss in the history of the report. We're setting a lot of records recently, of course, with the data, given the context. Paul Flood, Newton Investment Management Portfolio Manager, is with us. And we saw that incredible ADP number up by 978,000 in yesterday's ADP report, then job creation in the private sector, Paul. With that in mind, how high are your expectations for this non-farm payroll?
I think obviously we're seeing some strong numbers. And as you say, there's many records being broken. And that's just a fact of where we are in this recovery. We shut down the economy. We're starting it back up again. The data is going to be volatile, but we expect the economy to continue to recover as the vaccine rollout plays through. More importantly for us, it's what is the trend over the longer term as we go into the back end of the year. I think that's the important part, to see the economy continuing to recover and jobs continue to be created.
And that was part of the conversation last hour then, Paul, about how it might take the market a little while to get through all the detail of the jobs report, because clearly you can look at the overall number and that might have a dramatic effect on the near-term direction of assets. But then there could be a longer-term story that might or might not be different, and some of that might come down to wage data or the makeup of the particular groups where we've seen jobs created and what that tells us about how fixed or broken the labour market is. There could be a lot of interesting detail here.
Yes, certainly. You're going to have to look into the data to see, the headline number isn't going to be that important for investors. What they want to see is what kind of jobs are being created, what is the wage inflation looking like in the short term, and really, is that going to be a sticky wage inflation, or is that a short-term spike as businesses try to get access to those workers? We've seen the UK data already, some of the strongest growth in employment since the late 90s, driven by the service sector as the economy's reopened. The UK vaccination rates, very a long way through there, and that's creating a lot of demand as consumers want to get back to work and back to doing what they used to do over a year ago. People are excited to get out there and go back to the restaurants.
Yeah, indeed, a big focus then. And how does that play into inflation expectations, either globally or thinking about the United States, Paul? How high and for how long, I suppose, is the crucial question. Do we see inflation at elevated levels?
Well, I think, we are going to see, everybody's expecting in the short term inflation to pick up. That's coming through in all the numbers we see, and it's been driven by supply side constraints. The question is, as we move through that, does demand remain robust enough after you get the initial injection of the economy restarting and the consumers going about and buying products with the money that we see saved up in bank accounts? But longer term, what you want to see is that wage inflation really going to continue, or do we see the slack in the economy opening up again in 6 to 12 months' time? But in terms of the wider inflation basket, we would expect to see a very different regime than what we've seen over the last decade. We are now doing fiscal spending. You can see that coming through quite significantly, as well as the monetary easy policy that we've seen over the last decade. But the fiscal spending is a very different backdrop to one we had before. So if you look at money supply, or M2 in particular, we've seen significant growth in M2. That tends to be historically correlated with higher levels of inflation, as there's more money around and more money in people's pockets. And it's not just that initial injection that we've seen coming through the pandemic period. If you look at the last 3 months of M2, we're still growing at a clip of about 15% per annum on an annualized basis. And if that continues, then that's clearly going to lead to some more inflationary pressures, just as the supply of money and credit in the environment is bigger.
And Paul, thinking about the inflation pressures, when it comes to picking investments and which companies to get exposure to right now, where are you seeing companies with a lot of pricing power? Clearly, chips have been very topical, but are there other areas that you would flock to because they have pricing power, or stay away from because they don't?
Yeah, I think you have to be very clear when you're looking at, I guess, the consumer staples space, which brands have the pricing power to pass those cost pressures through and which don't. And if you're particularly looking for inflation protection, then it's the commodity sectors and the cyclical sectors that you really need to be more focused on. And that really ties up with the fiscal spend and the infrastructure spending that the Biden administration is really focusing on. And in particular for us, it's the green economy, looking for areas where you see the opportunity for continued structural growth. And you don't have to look at Tesla to get that exposure. You can look down the supply chain towards companies like Samsung SDI, which makes the battery for electric vehicles. You've already mentioned the semiconductor space, where obviously semiconductor content for electric vehicles is much higher than it is for traditional vehicles. And for income investors, you can look at companies like Volkswagen, where we think they'll be selling more electric vehicles than Tesla will in 18 to 24 months' time. And that's a company that looks very cheap on a relative basis, and has got proper profits and real cash flow to reinvest and build that out, given the targets that they set out going out to 2030 for their electric vehicles.
Okay, Paul, thanks very much. Stay with us. Paul Flood, Newton Investment Management Portfolio Manager. Thanks for your thoughts so far, Paul. And Paul's going to patiently stay with us for another conversation a little bit later on. We'll pick up on thoughts around the retail investing trends and get further thoughts from him around the car sector. He just talked about that there. Coming up, though, more immediately on this program, we speak to the president of Russia's second largest lender, VTB Bank, about Russia's post-pandemic recovery and the upcoming meeting between US President Joe Biden and his Russian counterpart, Vladimir Putin. Andrei Kostin joins us next. This is Bloomberg.
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 10 minutes into our European trading day, European equity markets looking a little brighter than maybe futures had suggested. A bit of upside on the Xetra DAX in particular, up by 0.2%. Now, the 24th St. Petersburg International Economic Forum is currently underway in the Russian city, bringing together business and political leaders from around the globe. This comes ahead of US President Joe Biden and Russian President Vladimir Putin's summit. The two leaders are set to meet face-to-face for the first time since Biden became president in January. That meeting is set to take place on June the 16th. Let's get some perspective on the Russian economy and Russian politics ahead of that meeting then. Andrei Kostin, president of VTB Bank, joins us, Russia's second largest bank. From St. Petersburg, Andrei, very good to speak to you. Thanks for coming to talk to us here on Bloomberg TV. You've told us in the past that you want to see good relations between the US and Russia. So what are your expectations? How high are your expectations for the Biden-Putin summit?
Well, the expectations are positive, but modest. We don't expect too much from this meeting, but this fact itself that two leaders are meeting, I think it's quite important. Of course, we had a record of Mr. Trump, which was not very encouraging, because Mr. Trump was saying a lot of good things about Russia, but in fact, we witnessed a very big worsening of the relationship between the two countries. But Mr. Biden is a very experienced politician, and he started with signing a new agreement, or actually extending the agreement of START 3. So we might expect maybe some positive steps in certain areas in which the United States are interested, including the disarmament and maybe some other issues. So we have, of course, some hope for better relationship and for better results.
Some hope then, Andrei. If President Biden's message to President Putin is that responsible states should not harbor those who stage ransomware attacks, ransomware criminals, and the US suggests that some of the recent attacks using ransomware have happened from Russian soil, that is their assessment. How do you think that would set the tone? How would President Putin respond?
Well, I think he'll be firm, but Mr. Putin is also a very experienced politician, and I think he knows how to deal with the leaders of other countries. And, you know, believe me or not, but Russians, and including Russian president, are very friendly, want to be very friendly with Americans. We are not enemies, and I think we want to show American people and American leadership that we are quite open for any discussions. But of course, if we are accused of certain things, which we believe we never did, that raises a certain reaction on our part. But I don't think that will be very, I would say, rude or tough talks. I think that we have very business-like discussions, and hopefully that we are positive and fruitful.
Okay, business-like. We heard from the finance minister of Russia yesterday, Andrei, that he confirmed the intention to cut dollars from the National Oil Fund. It will instead hold euros and yuan and gold. This part of a broader de-dollarization drive in the Russian economy. Is that set to continue?
You know, we are not anti-dollar or anti-American, but, you know, over the last years, since the introduction of sanctions, we saw how American side was using dollar as a weapon against Russian financial sector, against Russian industrial sector. So we have to protect our interest. You know, when there's always threat and the American Congress is raising this issue that we will impose more sanctions on the Russian banking sector. And of course, the dollar is the mechanism, you know. So we should find solutions, and that's what we're trying to do. We substantially strengthened.
Are you ready to trade euro? I'm going to place an order to buy euro. The price I'm looking to buy 121.11.6. Okay, if you're looking to trade euro, here is your chance. Please place an order to buy at 121.11.6. Okay, I'll speak to you later, guys.
I'm afraid that what we have to do, unfortunately, finding some solutions because of the position of American side, as I just want to repeat.
So Andrei, VTB says it's considering a new share issue, and some people have suggested this is difficult because of the sanctions environment. Some investors would then have to back away from trading your shares. What kind of workaround? Do you have permission for the workaround that you found here?
No, that is not a new shares. We, according the sanctions imposed on Russia by American side, European, we can't issue new shares. That was a big stock held, old shares held by one of the Russian banks. The banks actually was, after the bankruptcy of this bank, it was taken over by the central bank, and they were just selling the existing shares to international investors or to other investors. So it's very important to understand it's a new issue, and the sale, the secondary sale of the stocks are not forbidden by any sanctions.
Okay, that's interesting. We've talked about the dollar. A lot of talk here at Bloomberg about cryptocurrencies, Andrei, and I wonder what your expectations are for cryptocurrency and how big a role cryptocurrencies, Bitcoin or others, can play in the Russian economy.
We don't like Bitcoin. We think it's like making a fake money. You know, somebody is sitting somewhere and mining the money. It's like in the Middle Ages, you know, or those who are creating the fake currency. So, but the issue of the official cryptocurrency is quite important, and some countries are very much advanced, like China, for example. So in Russia, we discussed this issue with the central bank. The banks were a little bit concerned that central bank will take their business, but I think we find the solution when actually customers will stay with the banks while the cryptocurrency will be controlled and issued by a central bank. So the joint group is working on this, and as early as next year, we expect that the first test of the official ruble cryptocurrency test. And but it will take probably a couple of years to introduce this on a broader scale. But I think that's the future of the banking, because the world is moving very fast toward the digital world. So a cryptocurrency will be part of this digital world.
Andre, thanks very much for your time. Thanks for talking to us. Andre Costin, president of VTB Bank. Coming up on this program, AMC's wild ride from Bitcoin to AMC. The new king of meme stocks fell 18% yesterday, but still more than doubled its share price over the past 5 days. We dive into the latest detail there. That's next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
You've got the meme stocks moving. You've seen a lot of excitement go back into the meme stocks.
AMC and GameStop, they're now the two top stocks in the Russell 2000 value.
The speculation is intense. The appetite is there as long as the speculative fervor is there.
Plenty of money chasing stories, chasing ideas.
The AMC phenomenon, I think, is something that I would not lay at the feet of the Fed.
It is very much a social media phenomenon. It's not trading on pure fundamentals, it's trading on momentum.
People need to think about what's fundamental value and what's the stock price relative to fundamental value.
As we saw back in January, rocket ships go back to their launch pads.
Buyer beware. I guess that's the way I would put it.
Some of the reaction there on Bloomberg TV to the huge swings that we've seen in the share price of AMC, movie theatre, cinema chain in the United States. Paul Flood, Newton Investment Management portfolio manager, is still with us. And Paul, how do you make sense of the meme stocks phenomenon? AMC, the current poster child, but others seem to be available. I mean, how do you stick to fundamentals, as we heard in that soundbite from Bill Dudley? How do you stick to fundamentals when others are just talking rocket ships to the moon?
Well, I think, as a fundamental investor, long-term investor, you have to stick to your process and your philosophy. A lot of the meme stocks are driven by retail investors, given the low interest rates environments that are around, the furlough payments, the cash that's sitting in their bank accounts, and they're looking for ways to generate a return. For us, we stick to the fundamentals. What's the fundamental value of the business? And we try and take a long-term view in those companies. So if our stock price goes up a long way and reaches our fair value, then it's time for us to exit that capital.
As you can see, position opened on euro at 121.11.6. For other people who just watching and enjoying our day trading tools we're using, if you want to get the strategy, you need to go to company.co.uk and get a strategy. For other people, if you got the strategy, you can practice it. Practice for a week, for a couple of days, until you will get used to it. All information is based there. Don't forget, for new people, don't forget to register for our webinar. It will be on Wednesday. We're going to talk about arbitrage, how to use arbitrage when you're day trading, especially Forex. And good luck. Okay, I'll speak to you later, guys. Stay safe.
Music streaming growing quite significantly. Apple opening up music streaming services in 35 new countries across the emerging market area, all starting to contribute revenues into the music industry. Now, for us, we prefer to play it through the music royalty area. So, you know, this company like Hypnosis Songs that's listed in the UK, which owns the rights to music royalties, which is just a feed through, a percentage take of what the industry revenues are. So we do like the whole area, so I'm not surprised to see more M&A in that space. But for us, if you're looking for inflation protection, particularly within the alternative asset space, rather than investing in the low returns that are available in bond markets, we prefer to try and find places that have contractual rights to inflation-linked revenue streams. And within the UK investment company space, there are a number of investment companies that own renewable energy assets that have fixed inflation-linked subsidies. So that gives you an attractive return, but also protects you against inflation.
And Paul, you were mentioning in our last conversation, right, gold too. Let me just ask you about electric vehicles, because I know that's one of your convictions. You mentioned it in passing last time we spoke, but I wanted to ask you more. One of my colleagues has written an opinion piece this morning that suggests the success of engine number one, the activist investor at Exxon, it gets you thinking about where might be the next target for activist investors. And they're suggesting that perhaps automakers that aren't taking climate change seriously enough could be another target. Do you see that for some of the well-known auto names?
Yeah, I think anything that you have carbon emissions from is a target. You know, we need to try and help recover the climate, and part of that is trying to reduce the carbon intensity of our transport system, as well as everything else that we have an impact on with carbon. So, you know, I wouldn't be surprised, but I would say that, you know, we're a very different world today than we were 5 years ago. You know, this wasn't an agenda item. Now, you know, management teams, you know, even within the oil companies, are very well aware of the need to try and reduce the impact. Shareholders are very vocal about, you know, any kind of new E&P that companies are doing. On the auto side, you know, you've got all that pressure to try and make electric vehicles work. But that's going to increase, you know, significant demand for commodities in that space as well.
Paul, thanks so much. Paul Flood, Newton Investment Management Portfolio Manager. Thanks so much for joining us. Coming up on this program, we're back to Russia themes. We speak to the CFO of Russia's steelmaking giant, Severstal, about rising inflation, the EU's proposed carbon levy, and the outlook for the commodity markets. Will we see steel prices come back down to earth anytime soon? Any normalization? We'll talk about that next with Severstal. This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents, which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour into Friday's trading session, the last day of the last one of the week, of course, and European equity markets fairly flat this morning. At least at the aggregate level, we see a little bit of a gain, up by 0.2% on the Stocks Europe 600. The DAX getting the best of the gains. The FTSE a bit of a laggard this morning. Let's have a look at the sector perspective. The GRR function tells us that personal consumer, drugs and grocery stores, that is the best gaining sector this morning. Bayersdorf and that particular business, maker of health products, that company, consumer products, that company doing well this morning. On the downside, we've got three sectors in negative territory: energy, insurance and banks. Let's get away from the markets and back to what's happening at the St. Petersburg International Forum. The European Union is planning an import levy on steel, cement and aluminium produced in countries with lower environmental standards. Bloomberg has learned that importers will have to buy special certificates at a price linked to the EU emissions trading system. Carbon prices in that market have soared to records this year as the bloc is tightening its environmental rules. How are companies preparing for these new costs and these changes? Let's speak to Russia's steel-making giant, Severstal. The CFO of that business joins us now, Alexei Kulichenko. Alexei, thanks very much for giving us your time. So it seems that the EU is closer and closer to some sort of carbon levy. Is this a sign of things to come? Are we going to see a lot more of this?
Yeah, we obviously hear that that thing will come soon. We're still waiting for details, and depending on that, will be clear how it will influence basically import flows and also what could be the potential reaction to address that from suppliers' side.
And what impact might this have on Severstal? We've seen some businesses taking action to protect themselves. So Rusal, for example, splitting its business to carbon-intensive and cleaner parts. Are you thinking about structural changes to your company?
We definitely do, and I think that's a primary goal. We're working on our ESG improvements, especially in ecology side and CO2 footprint already by itself. It's not a matter of European Union duties, is just a matter of companies' responsibility. In the same time, it will be important, of course, to see what implication it will have for the price to consumers, for relative position of suppliers against each other and to local players. And of course, we are doing our best to improve our footprint anyway, and then it will depend on details of implementation of the duties, what impact it will have specifically, for example, for European deliveries.
I know that you've set up a team, Alexei, to work on CO2 emissions. You have targets of your own at Severstal. You're working with hydrogen and other decarbonisation projects. Tell us where you think the biggest gains for your business can come from.
I think at the moment I would split this into two parts. One thing where we already understand exactly what we need to do and what result we will have. From that perspective, I think we have a good opportunities to improve our CO2 footprint, especially in our upstream operations. We will announce in details our program on that soon. We understand that we can improve significantly our CO2 emissions in our steel making and mining capacities. In the same time, we understand that that's not enough, and we're working on new opportunities on which could be coming from hydrogen opportunities, from storage opportunities, from offset mechanism probably. We're actually investigating all areas in that area, and we also understand that we need to invest earlier to be ready for these opportunities when these technologies will be mature to provide significant results. So that's the second element. We try to prepare. It's more in the long term, and it's more in venture type, startup type, and I would say experiment type of activities we quite heavily investigated.
And Alexei, for a company like Severstal, where is the pressure coming from to tackle climate change, to take action on CO2 emissions? Is it from government, from legislation, from international norms, from international carbon levies, or is it from shareholders? Where does the pressure come from?
I think it's coming from everywhere, but I think it's, as I mentioned at the beginning, I would say primary responsibility of any company today. And I think our internal commitment and internal focus to that, of course, is the primary driver. We understand that we need to be responsible. We understand that we need to contribute to the challenge, I would say, as much as we can. So from that perspective, I think we're doing that, I would say, as a responsible company, first of all, but also then we understand that that became a day-to-day agenda of the company, like, and challenge from everywhere, from stakeholders, from social, from government, from export markets. So it's a kind of thing you cannot deal with anymore. I mean, you should do it anyway, and it's coming basically from everywhere.
It's coming from everywhere. Let me ask you about steel prices. Do you see any normalization ahead? Clearly, we've seen an elevation in steel prices from China to North America, plenty of demand, plenty of disruption to the sector post-pandemic. Do you see normalization? What will drive that?
I think we will see it with the time more and more. The key driver, of course, with the strength of demand and especially recovery from quite low levels of demand of last year, we see a quite stressed supply, especially on the markets which suffered mostly from the COVID restrictions of last year. So from that perspective, we see that momentum where supply is not catching up fast enough to deal with the growing demand. We see very high levels of PMI pretty much across all markets, especially in Europe. And we see that it's coming with the growing prices. It requires time. It requires significant working capital to catch up. So I think it's just taking longer than everybody's expected. But eventually we are in volatile, cyclical industry, and we understand that prices will reach the plateau and then will adjust to normalized level as soon as this supply will come more to normalized levels to address the demand.
Alexei, thanks very much for your time. The Severstal CFO, Alexei Kulitschenko, thanks very much for joining us from St. Petersburg. Let's get a Bloomberg First Word News update. Here in London is Laura.
Thanks, Anna. Inoculations against COVID-19 have reached the 2 billion mark in little more than 6 months. At the current pace, it will take 9 further months to vaccinate 3/4 of the global population, a threshold that could provide so-called herd immunity. The rollout has also been uneven, mainly benefiting the developed world, while lower-income countries have struggled to source shots. The US and the UK led the way with vaccinations early, with European Union members catching up after a slow start. President Biden has pitched a 15% minimum tax on U.S. corporations, along with strengthened IRS enforcement, as a way to fund bipartisan infrastructure package. The plan would also increase tax revenue by conducting more audits of rich taxpayers. The White House sees the offer as raising money without rolling back President Trump's 2017 tax cuts, something that Republicans have said is a red line. Activists in Hong Kong are planning private vigils and religious services to commemorate the anniversary of China's deadly Tiananmen Square crackdown. Police plan to deploy 7,000 personnel around the city to enforce bans on gathering, including 3,000 at the traditional vigil site Victoria Park. A prominent organizer was earlier arrested after applying to hold a public vigil to mark the occasion. Japan is to send COVID vaccines to Taiwan, which has blamed China for impeding shipments of shots. The consignment of some 1.24 million doses of the AstraZeneca vaccine is expected to arrive on a flight later today. Taiwan's vaccine shortage comes amid rising case numbers and fears of a health crisis. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. Now let's have a quick look back to the markets at some of the stocks that are on the move this morning. It's not great. Another day of not being great for aviation stocks. EasyJet and IAG, particularly the UK aviation stocks, I have in mind here after we heard yesterday that no new countries were added to the green list. That is areas that you can, with the government's blessing, travel to without quarantine. And there were no new countries added to that list, and worse than that, Portugal was removed from it. So as a result, we see another day of losses for EasyJet, now down by just over 2%, as you see there. IAG also under pressure, down by 1.6%. Vivendi, not a big move here. They are in talks to sell 10% of Universal Music Group. They've been planning to spin that off in some way, so maybe it was priced in, but they are in talks, and we've got the price with the Pershing Square SPAC owned by billionaire Bill Ackman. So that story of interest to markets. And Fever Tree Drinks is down by 2.5%. They've had some negative lines, I suppose, coming through from Goldman Sachs when it comes to that particular business. The analysts there talking about the vulnerability of the Fever Tree model, particularly vulnerable, according to Goldman Sachs, to consensus estimate downgrades as input cost pressures build. They're talking about freight and packaging components and other input costs. That's where we are on some of the movers then this morning. Coming up, we'll get to the geopolitics and tax policy. G7 finance ministers meet in person today for the first time since the pandemic, with a revamp of the global tax system at the top of the agenda. We will get a preview for you. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We're actually highly sympathetic to diversity, but we just don't want that to override merit, because I start doing that, I start compromising the company's mission, literally. And obviously that's not what our employees want from me, because they're there for a reason as well. We do a lot of really constructive things around.
Okay, guys, let's play stop and profit for euro at 121, sorry, 13.6. Okay. 121, 13.6. Okay, stop on profit placed. So anything happened, you will close this trade with profit. Okay, I'll speak to you later, guys.
These are very constructive, real things, that have effect, and that's what I like to do. That's sort of, how I come at this whole set of issues.
Yeah. You're not worried from the pushback of liberal Silicon Valley?
Well, I mean, I will tell you from my own experience talking to many CEOs, all the names that privately, we are of the same mind. It's just publicly, they find it difficult to be that way. Now, there have been some voices, recently where people are speaking more precisely to what other people are thinking and believing. So I think we need to come to a more moderated, real place, rather than, there's really no room for the hysteria and the outrage. We're CEOs, okay? We run companies. We have to produce results for our employees and our partners and our investors and our customers, right? So you can't get distracted in that mission. When you do, you might as well hang it up and let somebody else do it.
That was the Snowflake CEO, Frank Slootman, on considering merit when hiring and promoting employees and alongside other goals. Interesting conversation. 8:45 here in London, something that's taking place in London today. G7 finance ministers meet in London with reform of the international tax system top of the agenda. Leaders are considering a proposal from the Biden administration to make companies with at least $20 billion in annual revenue pay more of their tax bill in places that they operate. Let's talk to Bloomberg's Alessandra Migliaccio, who's been tracking this story and joins us now. Alessandra, what is the latest then on this international tax debate? Because there's the conversation around a minimum corporation tax, but there's also this hotly contested, talked about for many years topic about how you get highly mobile tech companies to pay taxes somewhere when that money can move around the world quite so easily. So what are we likely to hear about that at the G7?
Yes, that's right. Thank you for having me. Well, as you said, there's the commitment to a minimum effective tax rate at about 15% at least, and that's a promising start, and that's the beginning, and they seem to agree on that. But then, as you say, there is this issue of at least $20 billion in annual revenue as a threshold, and that is to make companies such as Amazon, for example, pay taxes, because as you were saying, they can move around. The Europeans are pushing the U.S. on this. They're pushing the U.S. to find some kind of consensus that could lead to a greater global agreement at the G20 in Venice, which will take place in July. One of the things, however, that they have not agreed on and they're still haggling over is the profitability threshold, because companies like Amazon, for example, have a very low margin. So there has to be a way to sort of retrofit the criteria so that it applies to what they're trying to do politically, and politically they're trying to make it fair. They're trying to make it so that all these companies are paying where they should be paying.
Yeah, and of course, this started as a conversation about big tech, which is often US big tech, and so lots of European leaders in favor of that, but also, I suppose, mindful of what it could do to some of their big corporates and the way they are taxed globally. So we'll watch that with interest and see how that breaks down. What else is going to be on the table at this G7 then, Alessandra? It's going to be busy.
Yes, extremely. Climate is a very big issue. The UK, who is hosting, obviously, is pushing to impose mandatory reporting of environmental risks on their big companies. For the UK, it's something that they've already worked on, they're already working on, but it's a difficult issue for other countries. It's not certain that they will be able to reach an agreement. So they're on knife edge. It could go either way, but it is a start. It's an important start on the issue of climate and companies. And then just very quickly, there's fiscal policy. Obviously, the economy, we're coming out of a pandemic. Countries have been spending enormously to protect their economies. What happens next? What happens with the huge debt? And how do you sort of slow that down without hitting the cliff edge, without getting into trouble, because they've supported the economy so much. And also there's the issue of, you know, how much Europe should support fiscally compared to the US. You don't want imbalances there. And finally, healthcare is an issue that is going to be on the agenda, all the health-related items, you know, as they apply obviously to the economy. And then there will be the bigger G7 of leaders that's taking place later this month.
Alessandra, thanks very much. Yeah, indeed, we'll look ahead to that taking place in Cornwall. Alessandra Migliaccio, thanks very much for joining us with a preview of what we can expect from all of these finance ministers gathering in London in person. Let's get a Bloomberg Business Flash. Top corporate stories we're covering here today at Bloomberg. Here's Laura.
Thanks, Anna. Billionaire Bill Ackman has confirmed his blank check company, Pershing Square Tontine Holdings, is in talks to buy 10% of Universal Music for about $4 billion. The deal by the SPAC represents an enterprise value of 35 billion euros for Universal. Owner Vivendi had originally planned to spin out the world's largest music company in an IPO. HSBC says all of its Hong Kong employees can return to the bank's offices from next week. In a memo, the bank says remote work will remain an option for those who prefer it. Hong Kong has been successful in containing the virus, but has lagged other financial centres such as New York and London with its vaccination programme. Google has announced that Android users will be able to opt out of being tracked by advertisers on smartphone applications. Later this year, developers will no longer be able to see a user's unique advertising ID if that person has declined to receive personalized ads. However, unlike Apple's iPhone policy, users won't be opted out of advert tracking by default. That's the Bloomberg Business Flash. Anna.
Thanks very much, Laura Wright here in London. Coming up on the programme, all eyes on the job data from the United States after last month's major miss. We'll get back to that markets conversation. We'll talk to the Markets Live team next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 7 or so minutes till the first hour of trading has been concluded. So European equity markets nearly a full hour into their trading day. And you can see that European equity markets are fairly unmoved this morning, pretty mixed, slight move to the upside on Stocks Europe 600. Let's get to Laura Cooper, Bloomberg Markets Live macro strategist here in London. And Laura, we are here in London, but our focus
Okay, that's it, guys.
Later on today when we get the jobs report.
Euro at 121.13.6. As you can see, it closed here. We made £200, and it didn't take us too long. As you can see, it just half an hour in 30 minutes. If you want to get the strategy, please go to company.co.uk and you will find out how we spotted this trade and how we made a profit. Next, if we will trade for half an hour, £200, £200, we will end up with the couple of £1,000 a day profit. Okay, guys. So follow us for free. You don't have to pay anything at all. You can copy our trades and also make a good profit. If you don't know what broker to use, how to choose the right broker, what kind of question you need to ask, go to company.co.uk, get the strategy, and you'll discover all the secrets, all the information, and the indicators we use in order to make a profitable trade.
Ratios or just the broader labor force participation ratio. And yes, wages are going to be critical. If we look at the beige book on Wednesday, there were anecdotes that firms are having to raise wages in an effort to try to curtail labor shortage impacts. We are seeing that feed through into those ISM gauges as well in those employment readings. But I think the challenge is that looking at average hourly earnings, this is still a data point that is distorted by the pandemic. As low-wage workers return to the workforce, that's going to actually pull that number down. So I don't think that's really going to capture the extent of wage pressures, although, you know, this report could provide some hints of are we seeing signs of labor shortages, as there's still potentially workers on the sidelines because of expanded employment benefits.
And in terms of market reaction to this data set, Laura, how are you positioning yourself? How would you think about positioning ahead of the numbers?
Well, I think markets are viewing this as a make or break, potential catalyst for markets that are really struggling for direction. I would expect that we're likely to see the dollar probably gain even further momentum. The Bloomberg Dollar Spot Index broke out of its recent downward resistance, and I think that's probably going to be driven by an upside lift to real yields. Real yields are deeply negative. As we get confirmation of that economic recovery, I would expect that taper talk is going to come back, even roaring further ahead. And so we could see really that knee-jerk reaction in real yields. But again, we really need to take time to digest through the details of this report.
Yeah, that's certainly a message that's come through a few times on this program. There'll be the knee-jerk reaction, and then there's the detail to digest. And we'll be thinking about that in terms of where markets go more longer term. Laura, thank you very much. Laura Cooper, Bloomberg's Markets Live macro strategist. That is it for the European Market Open for this Friday morning. Surveillance early edition is up next. I'm off to Bloomberg Radio, and European equity markets fairly unmoved this morning, thinking about the jobs report, looking ahead to the jobs report, thinking about the overall numbers and the wages component and all of that detail beyond. This is Bloomberg. And the wages components and all of that detail beyond. This is Bloomberg.
action. I would expect that we're likely to see the dollar probably gain even further.
I'm Eric Schatzker. Join me for my front row conversation with Canyon Partners co-founder and co-CEO Josh Friedman.
You've got big portions of the equity markets that are in business just to make acquisitions. That's what private equity firms' business is, making acquisitions and then selling companies. And when people make acquisitions and they use debt to make acquisitions, there will be mistakes.
Catch the full front row interview with Josh Friedman this weekend on Bloomberg Television.
It's hard to imagine a big wage inflation spiral at this point in time.
We can't stand still when it comes to climate change. We need to continue to be bold.
Crypto's a roller coaster. You got to be able to have an iron stomach to tolerate the ride.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. It's a mixed picture for stocks as investors await the May jobs report. We'll discuss the future of employment with UBS's Paul Donovan. Janet Yellen faces pressure for a global tax deal by the end of the week as she prepares to meet her G7 counterparts in London. And you've seen this movie before. Will AMC shares go on a wild ride as the chain raises money to cut debt? Where next? We discuss that. So it's a mixed picture. First of all, happy Friday, everyone. Happy U.S. Jobs Day. It's going to be a big day. And, of course, a lot of focus on that economic data. It's a mixed picture for equities as upbeat economic data from the United States stokes concern of a pullback in central bank stimulus. Now, investors bracing for May's non-farm payrolls report today. The consensus forecast is for a gain of 674,000 jobs in the month. Now, it comes after April's number, so arguably the biggest miss in the history of the report. Well, Bloomberg's Danny Berger has all of the details. Danny, I mean, this is a very, very important figure that will basically move the markets no matter what happens.
Yeah, exactly. And so important, not only is it going to move the markets, but they're not going to do much until then. Look, if the Fed is waiting for data to act, then so too will the markets wait for data to act as well. I mean, it really goes to show how important this is. So we're at a moment now where S&P futures are basically unchanged. I mean, up 1 basis point, that's nothing. But a VIX at 18 does belie the fact that the S&P 500 has barely moved at a headline index level. It's moved less than 0.25% for the past 6 days. That's the most quiet period we've seen for U.S. stocks since 2017. So that just gives you an idea of how people have been sitting on their hands waiting for this data because there's so much volatility and so much of a range of what we're expecting that could impact markets. We're also seeing U.S. 10-year yields not moving much either, but underneath the surface, there is volatility. We're seeing a lot of event risk priced into today versus was last month. Again, that makes a total amount of sense given how we were so off last time. So could we be really off last time? Well, this time, well, when it comes to the dollar, there's almost a sense that we figured it out. We got a big rally in the dollar yesterday after those ADP job reports. Now the whisper number has been lifted higher, Francine. And so I think the dollar perhaps has already started to price in that we might have an upside surprise.
What's the latest? I know, Danny, you've been all over the AMC wild ride. What are we looking at next?
Never far from AMC wild ride. Well, for one, I want my free popcorn. I know I can't buy AMC. I have disclosure trading agreements because we are journalists. We can't buy single shares. But that wasn't enough yesterday to continue to get AMC to rally. The fact that retail investors now get more of a direct communication. But all of this yesterday really has to do with the massive amount of dilution that's now going to happen in AMC shares. To give you just an idea of this, so about a year ago, they had 52 million shares outstanding in their A-class stock. Now they have 513 million shares outstanding. So they've just issued so many shares. Part of it's a survival strategy. Another part is just taking advantage of the wild ride. But Francine, in that share offering, there was a line there that really stood out to me rather, and will I'm sure stand out to you as well. So let me show you that. So within the risk factors, every company has to do this. They have to list risk factors when they're offering new shares. They say, under the circumstance, we caution you against investing in our Class A common stock unless you are prepared to incur the risk of losing all or a substantial portion of your investment. AMC here saying, don't buy our shares, Francine.
I mean, it's quite extraordinary. Danny, also, I make great popcorn just with a pan and corn.
Ooh, so I'd like to try that.
Welcome to that any day. Pre-market, I think AMC is actually down some 4%. It was down 5% earlier, now down 4.1%. Danny, as always, thank you so much. Our Danny Berger there. Now joining us to discuss all of the economic data and really that jobs report, what it means for inflation, and actually how we should look at it is Paul Donovan, UBS Global Chief Economist. Paul, as always, what a treat to speak to you, especially on Jobs Day. This is arguably one of the most important job days just because of the massive miss the month before. How difficult is it to, A, predict this one because of seasonal factors and because of the reopening of the economy?
So it's very difficult. I mean, economist jobs are always very difficult. And basically all you can do is come up with an educated guess. It's a guess because the models aren't working. We don't really know what's going on with the data. It's educated because it's economists that are doing the guessing. I think we're going to get a fairly solid report, but we do have challenges. The seasonal adjustment thing, one of the things you mentioned. So one of the really weird things we had last month was if you were 16 years old, the jobs market was booming. Now, why was that? Well, I think what was going on was that the pattern of the economy in April was actually very similar to the sort of spending and behavior that you see in the summer months when 16 and 17-year-olds are getting summer vacation jobs. And so what you had was actually April was like it was summer, but the seasonal adjustment process is saying, no, this is April. What are you doing? And you get all these weird distortions. So it means trying to get a sense of what's actually going on. You've really got to get your hands dirty with the details of the data to really get a grasp on where we're going.
So what are you looking at specifically, Paul? I know, I guess there's also low paid wages that are coming back because the employers are going back after being furloughed because the economy is reopening. Does that also distort the way we look at inflation?
It does create some problems. We're not generally seeing a huge amount of wage pressures. If you look at things like the Atlanta Fed's wage tracker, which is one of the better quality statistics, not very timely, it has to be said, but it's still a better quality statistic than something like average hourly earnings. And that's not signaling enormous inflation cost pressures coming through. The labor side seems to be relatively well contained. And I think that's fairly logical because whilst I do think we have some frictional unemployment issues, economists would call it, your difficulty matching up people out of work with jobs available. I think most employers are going to see this as a temporary phenomenon. Now, you're not going to raise wages for your entire workforce because you're struggling to find workers for a couple of months. That's not a logical response. So I don't think we're going to get huge cost pressures coming through. I think you'll get anecdotal evidence in selected industries, absolutely, but I'm not overly concerned about this at this stage.
But so the speed of today's recovery, is it much faster, Paul, than what you were predicting? Simply because of the rate of vaccination and some of the positive news from the health side?
It's actually more or less in line with what we have been suggesting is going to be happening. It is faster than the economic consensus. And I think the reason for this is twofold. Firstly, we've been saying right from the start of this crisis, people always, always, always underestimate how good humans are at adapting. And so the fact that people, adapted, the fact that my mother, who, is so much of a technophobe, she won't even follow me on Twitter, is now ordering her groceries online. That's people adapting, changing how they behave, and that allowed the economy to bounce back faster. But then the second thing is we keep hearing people talk about 2020 as a recession. There was no recession last year. Yes, GDP fell. Absolutely, it fell. People lost their jobs, which is very unfortunate. But it wasn't a recession in the conventional sense. We have more businesses in existence today in the United States than we had 12 months ago. Tell me the last 12 months are a recession and we've created more businesses. Of course, it doesn't work like that. So the economic models which are trying to sort of squeeze what's happening into a traditional recession recovery scenario keep underestimating the force of the bounce back, and that's why I think we should be erring on the side of the optimistic.
Right. Paul, first of all, Mama Donovan, if she ever follows you on Twitter, also needs to follow me. But we suspended an economy, right? That's kind of how we need to look at it. So if you suspend it, how long does it take to kind of, back up and to get the gains that we would have had there not been this economic suspension?
Well, yeah, exactly. I mean, that's a really big question. I often describe 2020 as sort of a global version of France's Grand Vacances. Everyone stops working for a couple of months and then everyone goes back to work. But we still lose the output, of course, and that's still a challenge. And I think that the answer to this is probably a little bit complicated, that there are some economies and some parts of economies which I think are going to be able to bounce back more quickly because they can adapt more readily to the situation. It's relatively easy for my mum to be going online to buy her groceries because, of course, the UK has got a very well-established online retail network in advance of the pandemic. The infrastructure's all there. In other countries, where you don't have that tradition, it's a little bit more difficult, and so it takes longer to adapt and recover. Again, the UK, the United States, relatively easy to work from home. In a country like Germany, it's more difficult to work from home. I can work from home because I'm an economist and it's perfectly easy. If I was making a BMW, it's quite difficult to make a BMW in your front garden. So there's that sort of difference. But the other thing that I'm looking at is the risk of an economic long COVID. We know that in economics, when there are very disruptive events and when fear levels are very high, the effects of that on consumer behavior can actually last a very long time. And if we look at some of the areas of the world that were hit very hard and very early by COVID, so I'm thinking like countries like Italy or states like New York in the United States, we may actually see those areas not fail to have a bounce back. They'll obviously bounce back, but actually take longer because the consumer sentiment's been that bit more damaged.
Paul, thank you so much. Paul Donovan there of UBS stays with us. We'll talk a lot more about the G7 as well. Smart Conversations on Bloomberg Surveillance Early Edition. Later on in the program, we speak to the Deputy General Manager of the Bank for International Settlements about green swan events. After that, we'll also speak to Kirill Dmitriev. He's the Chief Executive of Russia's Sovereign Wealth Fund, which funded the nation's Sputnik vaccine. Up next, though, Profit and Prejudice. We continue our conversation with Paul Donovan from UBS about his take on the future of work. If you have any questions for me or for Paul, just IB plus TV Go. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is buy.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. U.S. Treasury Secretary Janet Yellen is facing pressure to make progress on a global tax deal by the end of the week. She'll be in London to meet a group of 7 counterparts for the first time as the world's most powerful finance minister. Yellen's team is downplaying expectations for progress this month. Now, a key sticking point is how to tax tech giants like Amazon and Facebook. Now, inoculations against COVID-19 have reached the 2 billion mark in little more than 6 months. At the current pace, it will take 9 further months to vaccinate 3/4 of the global population, a threshold that could provide so-called herd immunity. The rollout has also been uneven, mainly benefiting the developed world, while lower-income countries have struggled to source the jabs. The US and UK led the way with vaccinations early on, with European Union members catching up after a fairly slow start. And activists in Hong Kong are planning private vigils and religious services to commemorate the anniversary of China's deadly Tiananmen Square crackdown. Police plan to deploy 7,000 personnel around the city to enforce bans on gatherings, including 3,000 at the traditional vigil site at Victoria Park. A prominent organizer was earlier arrested after applying to hold a public vigil to mark the occasion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, let's discuss the future of work with our guest, Paul Donovan. He's a global chief economist at UBS and also the author of a great book, Profit and Prejudice, The Luddites of the Fourth Industrial Revolution. Now, in it, Donovan sets out why avoiding prejudice is critical to economic success in a period of profound change, such as the current one. So, Paul, again, congratulations on the book. I know it came out, I think, a couple of months ago, and it is more important than ever, given, I guess, the inequity that we've seen accelerating because of COVID-19. First, are we making any progress? When leaders tell us that they're building back better, are we?
It's a mixed picture, as it so often is. We are seeing, I think, a focus on fairness. It's certainly become part of the zeitgeist, and issues like the G7 discussing a minimum corporate tax rate. That's part of this process. But if we look at what the pandemic has done, women, for example, disproportionately took on childcare. I think it's one of the reasons why we're having some problems with parts of the US labor market, that women are not re-entering the labor force because they're still dealing with childcare. A very gender-focused division of labor, which is not appropriate. We've also, of course, seen acceleration of structural change, and that makes adjusting to structural change that much harder. It's a lot easier to adjust to structural change spread out gently over 10 years, but when it's condensed into a 12-month period, the upheavals of the retail sector or transport or employment, that's very difficult to deal with. And my fear, which I talk about in the book, is that because this change is so disruptive, we will go into scapegoat economics. It's not my fault I lost my job. That person stole it. That immigrant or that foreigner or minority took away my job. And you very, very easily fall into prejudice, which is just so economically destructive, so economically damaging. But you can see why this process of disruption encourages people down a route towards prejudice. It's understandable, wrong, but understandable. And that's what we've got to really fight against. And I don't think enough's being done just yet.
Paul, I have a great question actually from someone who's been following us. So thank you so much if you're viewing at home or from the office or wherever you're viewing to send all those questions in through IBN. This person's writing in, so how does a potential disruption of the hot property market in large cities due to remote working, how would it impact your long COVID economic scenario, Paul?
Well, that's an interesting question. And of course, it's going to vary from country to country depending on how practical home working is. There was a great paper published late last year looking at different countries' abilities to do home working, and it depends on the infrastructure that you have, and it depends on the nature of the jobs. If your professional service is relatively easy to work from home, manufacturing almost impossible. So it's going to vary from country to country. But I think we've also got to reflect that over the medium term, the property market sort of potentially rebalances, because if I'm working from home, UBS does not need to provide me with a large office. Not that UBS ever provided me with a large office, but the real estate in terms of office real estate can come down and residential real estate goes up. So you sort of rebalance. It's very interesting that I think it was last month, the City of London, which, as you know, does not have a huge number of residents, has announced that they're converting offices into 1,400 new homes. And that's, I think, symptomatic of the sort of adjustment. But of course, it does take time. It doesn't happen overnight. You don't, demolish an office building and put up an apartment block in 12 months necessarily. So that's going to be the sort of the friction over the next 2-3 years that we're going to have to work through.
Paul, thanks so much. Paul Donovan there, UBS Global Chief Economist and author of Profit and Prejudice, the Luddites of the Fourth Industrial Revolution. Now, coming up, Pershing Square, Bill Ackman's SPAC, is in discussion to buy 10% of Universal Music. We'll have the details next, and this is Bloomberg.
half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, billionaire Bill Ackman's SPAC is in talks with Vivendi to acquire 10% of Universal Music Group. Now, the blank check firm confirmed it would buy the holding for about $4 billion, representing an enterprise value of 35 billion euros for the world's largest music company. Well, joining us now is Matthew Bloxham. He's Bloomberg Intelligence's media and technology analyst. So, Matt, how surprising is this deal? I know there was quite a lot going on with Vivendi, also a couple of billionaires involved in France and Amber Capital.
Yeah, I think it's perhaps a little bit surprising about who the potential buyer is, but Vivendi had announced not so long ago that they were planning to sell another 10% of Universal Music directly before they spin off the bulk of it to shareholders later in the year. So, yes, perhaps more that it's a SPAC than another kind of perhaps strategic buy that's surprised people today, I think.
So, Matt, at this point, what does UMG actually become from here?
Well, yeah, I mean, I think this deal itself is just a bit of arbitrage, I think, because the company's going to be listed on Amsterdam Stock Exchange later in the year, assuming that shareholders in Vivendi approve the deal. So I think going to a SPAC really is a tax-efficient way for some kind of investors to kind of get their hands on that stock, because there's been a bit of contention about the way Vivendi's planning to spin out Universal Music. It's going to be a special dividend which might attract some tax for some investors. So by buying 10% and then spinning it out to the SPAC investors, they may be able to avoid that withholding tax when Universal is eventually spun out and listed later this year.
All right, Matt, thank you so much. Matt Bloxham there, Bloomberg Intelligence's media and technology analyst. Now, coming up, we talk AMC's wild ride, but of course, it's a big Friday day because we have the U.S. jobs report. That will give an indication of what markets will do next. Remember, last month, it was one of the biggest misses in history for the jobs report. Today, we're expecting quite a big bump up, but actually unclear what that means for dollar. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it.
Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Well, it's a mixed picture for stocks as investors await the May jobs report amid a brighter employment picture in the world's biggest economy. Janet Yellen faces pressure for a global tax deal by the end of the week as she prepares to meet her G7 counterparts in London. And you've seen this movie before. AMC shares go on a wild ride as the chain raises money to cut debt. Where? Next, we discuss. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. So since the start of the pandemic, the term Black Swan event has been thrown around a fair amount. Black Swan is a metaphor for an extremely negative event that comes as a surprise and which has potentially severe financial consequences, such as a global pandemic. What if I told you there are also green swans? Now, this is the Bank for International Settlements introducing climate change risks as part of the concept of financial systemic risks. They call these risk events green swans. Well, the BIS, which is a central bank, is holding a conference to discuss central bank response to climate. One of the attendees is the Bank of England Governor Andrew Bailey, and he told the conference that the MPC recently discussed the economics of climate for the first time.
We've come far, but we've got a long way further to go. And we can't stand still when it comes to climate change. We need to continue to be bold and learn from our work so far to deepen our understanding and inform future actions.
So joining us now is Luis Pereira da Silva, the Bank for International Settlements Deputy General and author of the Green Swan book by the BIS. Thank you so much for joining us, Mr. da Silva. First of all, when you look at the financial sector, the strides, and I'm looking at some data here on the Bloomberg terminal, which is a great way to track how much improvement we've made, but actually how much more can it contribute to solving the climate crisis?
Good morning, Francine. Thank you for having me. I think the central banking community is contributing a lot to raise awareness about climate risk. You mentioned that we labeled the green swan climate risk. It's because it's not like a black swan, a tail of the distribution event. It is certain to happen. And that's why the central bank community is contributing to raise awareness, to make sure that there are the proper scenarios for risk assessments, there are the proper methodologies to assess the resilience of the system, and that we work together in coordination. Why is it important to coordinate? And this conference is about coordination, because no single actor, no single country, no single instrument is capable of solving the challenges posed by climate change. There needs to be cooperation with, of course, the community of central banks, and they are regrouped in the network for greening the financial system, but also with treasuries, with the whole private financial sector, and also with civil society. This is the goal that the conference is achieving, and we have quite a good attendance and quite a good set of messages out of it.
So, Mr. da Silva, what do you think the most interesting conclusion at the conference is so far? How much more, what's the role of the BIS in all of this, and how much more progress can we do in the very short amount of time that's left?
The BIS has a convening role, and it regroups regularly the community of central banks. But we are going beyond that a little bit with now assembling the whole of the financial sector in this conference. And our contribution is at the same time technical. We are developing through a number of panels in these conferences practical solutions to address climate change. And they revolved around, for example, the taxonomy of green financial instruments, the ways in which you should disclose your risks, the way it should disclose scenarios for stress tests. At the same time, the BIS is also incentivizing the financial sector to think also of the opportunities for investment out of COVID-19 and out of the risks posed by climate change. So it's an array of dialogue that is taking place here at this conference, and also, of course, with the contributions of major central banks around the world, making sure that they convey their messages about how they intend in their mandates of financial stability to address climate change risk.
How different do you think the world will be, Mr. Silva, in 10 years? We also saw this week a lot of shareholders, putting pressure certainly on companies that are considered still polluters, such as big oil companies. But is the financial sector also going to be pressured by shareholders, by people that actually really want to make a difference quite fast?
Francine, this is a very good question. I think we need to aim at evolving towards, of course, identifying and removing climate risk as much as possible. And the instruments are multiple. I mentioned the coordination. It requires multiple actors, including, of course, treasuries, and multiple instruments, including, of course, carbon pricing. But it is an array of things that is happening at the same time. Regulatory discussions about how to address prudential rules for being more resilient to climate change. But also there is an enormous opportunity for the finance industry to begin considering the new possibilities of investments out of COVID, but also for the benefit of addressing climate change. Mind you, the financial industry was the one that financed the transition towards the industrial revolutions. Now, we know now that there were adverse carbon consequences of that. But let's think also of the opportunities, the rewards that taking the chances, the new investment opportunities, the research and development initiatives, the new financial products that we can develop in a transition to a net zero economy, what the financial sector can achieve. It has to be done, of course, with strong standards, stronger guidelines from the public sector in cooperation with the public sector. But there is perhaps a view that you can try to move away from climate risk seen as a sort of Minsky moment for the financial sector towards a view where you can use COVID and what we know now about how to address climate risk to move towards perhaps a Schumpeterian world of opportunity in the future for, of course, the financial sector, but also for societies at large.
But Mr. De Silva, do we need to just be much faster? So, instead of guidelines, at some point, when should regulators consider making it mandatory, these disclosures? Is it, if you link, for example, the pay of an executive to climate goals, it would make things change very fast.
I think there are a number of views that were discussed in our conference. Mandatory disclosure is certainly one that was mentioned by several participants. More stringent regulatory approaches to climate risk. And I think the pressure probably needs to come from both ends. You mentioned the pressure from certain shareholders. Yesterday, Vice President Al Gore mentioned a very powerful concept, which is radical transparency. The pressure that will come from the general public and from shareholders to at the same time move alongside the regulatory aspects also into the content and the carbon risks in balance sheets of corporates and financial firms. So we need to take this, Francine, I think with the view that this move needs to be smooth in a sense that it avoids triggering episodes of financial turbulence. It could be a win-win for all groups involved in this dialogue, and that's why I'm talking about coordination, without minimizing the risks that we are currently. You know that the situation is very serious. We are running out of time. But even if we are running out of time, we should consider these pressures that can be positive in bringing regulatory progress, but also more radical transparency in the way people will assess climate risk and will sort of take action towards moving our societies and our economies towards a net zero economy.
Yeah. Well, thank you so much for a very important conversation. Luis Pereira da Silva, the Bank for International Settlements Deputy General Manager. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. HSBC says all of its Hong Kong employees can return to the bank's offices from next week. In a memo, the bank says remote work will remain an option for those who do prefer it. Hong Kong has been successful in containing the virus, but has also lagged other financial centres such as New York and London with its vaccination program. Now, Google has announced that Android users will be able to opt out of being tracked by advertisers on smartphone applications. Later this year, developers will no longer be able to see a user's unique advertising ID if that person has declined to receive a personalized advert. However, unlike Apple's iPhone policy, users won't be opted out of advert tracking by default. And Tesla shares tumbled on a report that Chinese orders dropped by almost half last month. The stock fell by more than 5%, adding to a more than 30% slide from its late January peak. Tech news outlet The Information says monthly net orders in China fell to less than 10,000 in May from more than 18,000 in April. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Leanne Gerrans there in London for us. Now, EU member states have agreed to allow the European Commission to raise as much as 800 billion euros in joint debt. The unprecedented step will help fund the bloc's recovery from the pandemic. Well, joining us now with the details is our Brussels correspondent, Maria Tadeo. Maria, it's a pretty big breakthrough. How will it work?
Yes, Francine. So this is a huge deal when you look at the symbolic nature of it, the fact that the European Commission is doing this and tapping markets jointly, but also the amounts of this. This is monster. In 6 years, they need to tap about 800 billion euros until now and 2026. Now, what is interesting, though, is the Commission says this year alone, they want to issue 80 billion euros and they want to get started quickly. They want to tap markets in June. And today we're actually finding out that today the Commission reached out to banks who will be helping places. They have overall 39 different institutions that are working on this to get a proposal request, potential pitches to the way that this sale should look like. And what we understand is that this is probably going to be done through a syndication. And if you look at the track record from the Commission, it means that that could come on June 15th. Again, it's not confirmed, but that is usually the way the Commission works. They give banks a week to come up with ideas, and then they announce the sale, which should be, in this case, on June 15th. So they're getting ahead quickly, and they want to place a lot, given the fact that there's a lot to issue in a very short amount of time.
So, Maria, is there a danger that actually a lot of them will come under fire from legal jurisdictions because then, with retrospect, they say, actually, we shouldn't have done it?
Well, you know, what they say is that at this point, that is very unlikely. And any time something has been challenged in hindsight by a court, and of course that could be, I'm sure we're both thinking of the German courts, it's been proven not to be in any kind of disagreement with jurisdictions or laws. So they don't worry about that. The biggest issue right now, I would say, is that they want to place it well. And the amount of time is very short. You're looking at 6 months left for the year, 80 billion euros this year, 150 on an annual basis every year from now until 2026. And, you know, it raises questions about, you know, how is this going to imply or impact the German Bund? What will this do for the French bonds, which have traded as a safe asset now? They could have now potentially a new competitor. And also the role of the ECB, given that there's a lot to be issued, how much will it buy?
Maria, thanks so much. Our Maria Tadeo there in Brussels for us. Now, coming up, as SPIEF 2021 kicks off in St. Petersburg ahead of the big Biden-Putin summit, we speak to the chief executive of Russia's Sovereign Wealth Fund. That's coming up next, and this is Bloomberg.
Here's the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the 24th St. Petersburg International Economic Forum is just getting underway as Russia recovers from the coronavirus pandemic. In 10 days' time, the focus on the world will be on the summit between the U.S. President, Joe Biden, and Russia's Vladimir Putin, their first face-to-face meeting since Biden became president in January. Well, we're very pleased to welcome now Kirill Dmitriev. He's the chief executive of Russia's Sovereign Wealth Fund, who joins us from SPIF. So, Kirill, thank you so much for, first of all, being with us. I know it's quite exciting to have an in-person event. But let me get straight to the heart of the matter, which is Sputnik V. We've had a number of requests from actually a lot of viewers that watch us that want to know some of the promises that you've made on how many of the doses you'd be able to deliver to countries outside Russia. Can you keep the promises you've done so far?
Yes, definitely. We'll actually have a great meeting today with President Putin and producers of the vaccine, and you will see more than 20 producers in 14 countries that are producing Sputnik already or will be producing shortly. So we're on track to deliver vaccine enough for 800 million people this year. And it's very important because we cannot be the only solution to pandemic, but definitely Sputnik is one of the solutions. And we all need to work together because only together we can defeat COVID. We can win the race with different mutants that are out there. And I think we need to really work together, different vaccine producers, different countries, not to make vaccines political, but really make vaccine a positive human enterprise.
I mean, 800 million is actually the larger than the figure I heard of 700 million. Does it, I mean, I think a large hub for the production was India. Does the horrific, what's going on in India with COVID-19 change the production hub, or are you still able to produce it there?
Well, today you will see 5 of our producers from India, and we have agreement with Indian government that a big part of production in India will go to India, but also a significant part will be able to export from India. So basically, we are going to work with India as a core hubs of production, but we also have China, we also have Korea, we have, as I mentioned, 14 countries, and Russia is unique in that we set up partnerships with all those nations. We are fully transferring them technology to produce a vaccine, and it makes them more vaccine independent, allows them to save their people and to export vaccine as well.
So I understand that, some of your biggest customers are Turkey, 50 million doses, Mexico and Argentina. Is that progressing to plan and within the timeline?
Well, definitely. And if you see at the real world vaccination data from Argentina, from Mexico, from Hungary, from San Marino, from other nations, you see Sputnik performing as one of the safest and most efficient vaccines. And it's very important because people were asking questions about, Russia, but it's not a Russian project anymore. We are vaccinating in UAE, in Bahrain, in more than 45 nations are being vaccinated with Sputnik right now, with 66 nations having approved it, with a population of 3.2 billion people. So yes, we are going to deliver vaccines on plan, and we are playing a big role. And we also have a new vaccine called Sputnik Light, which is just one of our first shots, and basically it showed efficacy of 80% in Argentina. And this is also going to be an important product for countries who want to have one-shot vaccine.
How's the vaccination progress actually going in Russia? I think I was looking at some independent polls, Mr. Dmitriev, that actually, said about 2/3 of Russians actually don't want the vaccine. At some point, if there's a third wave in Russia, will you have to make it mandatory for people?
Well, we just had another poll that in Germany, more than 60% of people are willing to be vaccinated with Sputnik, and actually 70% in East Germany. But in Russia, you are right, we need to increase vaccination rates. And basically, Russia has been a bit of a victim of its own success, We have only 1/3 of COVID cases on the peak 2 months ago, and many people feel that COVID is finished. But we need to have better education of people and basically better vaccination rates. We feel that vaccination rates already are increasing. We are hoping to double vaccination rates monthly in the next 1 month. And definitely vaccinations are important, but COVID cases in Russia right now are actually significantly below what they were before.
So can you give us exact numbers of how many people have been vaccinated in Russia or even in Moscow, and how you expect that to proceed in the next couple of weeks and months?
Well, I think Ministry of Health will give the specific number. We actually definitely have, around 20 million of people who've been vaccinated in Russia, and this number is going to increase significantly. The goal is to vaccinate, up to 60% of the population, and we will do this basically in June, July. So we believe that by July, we'll have most of the people in Russia who wanted to be vaccinated, fully vaccinated.
Have you had any issues with vaccine raw material shortages?
No, because we actually are working with lots of suppliers around the world. We rely a lot on the Chinese components as well, and we build a supply chain to be resilient, so we are not dependent on a particular nation for any of the supplies. We have several, nations to choose from. And I think this is very important because you're right, supply chain is a big issue for many vaccine producers, and we really focused on on diversifying the supply base.
All right. Thank you so much for joining us today. And of course, good luck at the St. Petersburg Economic Forum. Kirill Dmitriev there, the Russian Direct Investment Fund Chief Executive Officer. Now, you've seen this movie before. AMC shares go on a wild ride as the chain raises money to cut debt. Where next? That's what we discuss, and this is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, now back to AMC's roller coaster ride. Bloomberg's Ksenia Galushko joins us to help decode it all. So, Ksenia, what are the professional investors actually saying about this crazy volatility we've seen?
Hey, Francine. So we spoke to about 20 investors and traders yesterday, and they're honestly terrified of this volatility. They're calling the surge in AMC, which has seen the shares rise 3,000% just this year alone a speculative bubble. It is not backed by fundamentals because we're talking about a pretty old-fashioned business that is not going to see any major innovation. They're talking about excess liquidity and easy monetary conditions, and they're also talking about how it's become a cult. It's a real game, and we're seeing that all over Twitter. We're seeing pool parties with the AMC signs. It's really turning into a game for investors, for retail traders who are going against Wall Street on AMC shares.
Ksenia, thanks so much. We'll have to get you back on because I know this is a story that will run and run. Ksenia Galushko there. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Of course, Danny Berger filling in actually for Kaylee Lyons today. She'll be here in London with me. We have you covered for the U.S. jobs, and of course, we'll look at dollar dynamics. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
It's hard to imagine a big wage inflation spiral at this point in time, given that you still have 8 million jobs short of where you were going into the pandemic.
I do think there's more of a risk of an upside to inflation. And I think the Fed would be wise to at least acknowledge that risk more and begin its tapering and discussions of tapering.
Regardless of what the Fed does or does not do, says or doesn't say, how many thinking abouts we hear, the U.S. economy is going to grow somewhere 6, 7, 8% this year.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from London and Berlin on this Friday, June the 4th. Our top stories today. Brace yourselves. The U.S. jobs report comes out at 8:30 a.m. New York time. It may be just as volatile as the last one was. Biden's blacklist. He's amended the ban on U.S. investments in Chinese companies by adding dozens of firms with links to the military or the surveillance industry. And will this deal hit all the right notes while Vivendi may sell a chunk of the world's largest music company to blank check firm backed by billionaire Bill Ackman? Well, I'm Francine Lacqua here in London, Matt Miller and Danny Berger. So we're respectively in London and Berlin. Keely Lines off today. Matt, a lot going on. It's all about the U.S. jobs. But what did we ever see what did we see overnight in Asia?
Yeah, we saw kind of a mixed trade in Asia overnight. Everyone is waiting for jobs, so you're not seeing much move very far in either direction. But if you take a look at the map, you will see you had gains in China, you have India down a little bit. So a bit of a mixed picture. If you do look across the entire Asia Pacific at the MSCI index, you will see a slight drop, about 0.2%. But we had gains in New Zealand, gains in Australia. So the ASX 200, for example, was up a little bit. And you saw some individual stock stories that were interesting. For example, Toyota Motor, that's 7203JT down at the bottom. That's Toyota Motor. Could have just called it Toyota. Up 1.6% to 9,949 yen. But if you look at the U.S. trade, it'll be a lot easier to understand. They trade under the ticker TM, Toyota Motor, in the U.S. I also thought it was interesting to see the China 10-year yield rise. Interesting that investors are selling off that debt right now as the UN gets cheaper and cheaper. It doesn't look like the PBOC can do much to stop that slide. Danny?
Yeah, that yield is going to be so important for what happens with that currency that China cares so much about. Well, Matt, I hate to break it to you, but the session in Europe also a bit more lackluster as well. We're looking at just a bit of a change on the European stock 600. And if you look into the different regions here, you're going to see a lot of gray. Again, not a lot of change, but the unfortunate thing for these markets, as we've gotten further along in the session, they've been dragged down further. So it's this kind of lackluster. What happens to the jobs report? We don't have any steam, no catalyst here. At one point, we did have the DAX higher, but now falling just a touch again. But the real standout has to be the FTSE 100, down 0.25%. A lot of that is the FX effect. We have a stronger pound today, not great for those large multinational companies in the UK. Of course, there's the travel story, which is hurting them as well. Now, let me contrast that picture of a stronger pound with what's going on in the euro. So let me show you some of the individual assets on the move. We do have a euro this morning that's succumbing to that stronger dollar. We have the dollar, a lot of covering of positions ahead of that jobs number. So you have a euro that's down about 0.1%. Barely any movement in bunds. The story really here has been anemic auctions. Nobody wants to buy up bunds if you're getting barely any yield off of that. And that is true across the European sovereign debt space. Really a point of tension for traders there looking to make any sort of yield. Of course, this has always been a problem, but it continues to be one. And I mentioned the travel story before in London. EasyJet getting hit down nearly 2%. It fell about 3% yesterday. People not happy with the green list coming out. And Portugal, now Francine, none of us here in the UK can travel to Portugal and not have to quarantine when we get back. The EasyJet boss, some strong words against that. I know, it's a bummer. And now when it comes to the US market, you do have barely unchanged here. If the Fed is going to be waiting for data, so are traders. We're not eager to make any moves here before the jobs number, but the dollar has been ever so slightly stronger. We had that ADP number out yesterday. The jobs number was stronger. Has that in turn lifted the whisper number? Do we now anticipate even stronger jobs? So it means the dollar can rally at this point. Regardless, some of the calmness we're seeing in this market goes to emphasize S&P 500 has moved 0.25% or less the past 6 days. Its calmest period since 2017, Fran.
I'm so confused. I can't go to Portugal anymore, and no other country was added on the green list. At the moment, unclear where you can go on holiday, so just keep on watching the news. We're stuck. We have it right here on Bloomberg. Now, a look at what's ahead today. The Fed Chair, Jay Powell, takes part of a Green Swan panel on central banks and climate change with the ECB President, Christine Lagarde. Bloomberg will have live insight from the Bitcoin 2021 conference in Miami. We'll, of course, get the U.S. May employment report. That's at 8:30 a.m. New York time, coming off the heels of an unexpectedly weak April report. And the Russian President Vladimir Putin also delivers his keynote address at the St. Petersburg International Economic Forum. Then G7 finance ministers actually meet in person, I understand with masks though, in London. It's Secretary Yellen's first overseas trip since taking office. Now, President Biden has signed an executive order amending the Trump-era ban on U.S. investments in Chinese companies. It bans new investments in 59 Chinese firms, including Huawei, and gives investors 1 year to fully divest. Well, let's get more with our Bloomberg U.S. politics editor, Kathleen Hunter. Kathleen, does this just mean that actually the Biden administration will be just as tough on China, if not tougher, than President Trump was?
I think that's absolutely the takeaway, Francine. I think that, there was some question coming in about whether Biden would
Are we losing her? It does sound like we're losing Kathleen Hunter. Always a problem with these telephones. The technology just isn't there yet for telephony to work properly. When we do get her back, she's doorstepping. I'm sure she's wearing a mask. Everybody's probably vaccinated, but wearing masks anyway to put forth the correct image. In any case, we will try and get back to her on the G7 meeting there. Fran, let's get to the big pop music deal with a SPAC twist to it. Vivendi is in talks to sell 10% of Universal Music Group to a blank check company, a SPAC backed by Bill Ackman. UMG is home to artists like Taylor Swift and Drake. The potential transaction would value the company at around 35 billion euros. It's $40 billion. Let's get more from Bloomberg Intelligence TMT analyst Matt Bloxham. So, Matt, why is Vivendi selling? Why do they need to monetize this asset?
Yeah, well, they've been looking to monetize Universal Music for quite some time, and this is part of just a long-running process. They sold about 20% of the business to a Tencent consortium last year for a slightly lower valuation, about 30 billion euros. This one's at 35 billion. And they did actually flag earlier in the year that they were planning to sell another 10% before they then spin out the rest of it, 60% of UMG to shareholders. And, basically for a number of years, people have felt that UMG's undervalued in the Vivendi share price, and that either selling it or IPOing it was a way to kind of get a better recognition of the value of this fast-growing asset in the Vivendi share price. I think it's a bit of a surprise that it's going to SPAC, but the actual process itself is kind of consistent with what's been happening for a good year or two now.
So, Matt, what's Vivendi going to do with the money?
It's a good question. I think obviously, Universal Music's about half of the business, so it's going to leave a big hole. They've got a buyback program, but it's got a cap of 29 euros a share, which is pretty much where the shares are. So I think what we'll see is it's controlled by Vincent Bolloré. They've been buying up minority stakes in various media businesses across Europe. I think no one's quite sure what they're going to buy next. Possibly they'll get a bit more heavily into some of the TV M&A that's going on in Europe. But I think for sure they'll be looking to beef up their European media empire similar to what they've already got.
All right, Matt Bloxham, thanks very much for joining us. Matt Bloxham covers tech, media, and telecoms for us at Bloomberg Intelligence. Let's get back to U.S. politics. We got Kate Hunter back on the line, and she is, as Fran says, I guess, doorstepping G7 finance ministers. What do we expect in terms of the meeting today, Kate?
Well, there's a big push to get an agreement on a global tax sort of framework, and there seemed to be a big breakthrough a few weeks ago when the Biden administration talked about a lower corporate tax rate. The question now is whether or not there's some kind of movement on that at this upcoming meeting here in London. And if there is, I think the thinking is that that could pave a way to a broader agreement at the G20 in July. But obviously, this is all happening against the backdrop of President Biden's efforts to get a economic package passed domestically, and certainly any efforts to change the tax code are going to have domestic repercussions. So it's still a very long road ahead.
What are we expecting on China, Kat? So we were talking a little bit about it before, the fact that this administration could be even stronger on China, but is it the same tactics?
Well, that's the thing. I think that we are looking at a continuation, really, of Trump-era policies in terms of continuing to crack down on any companies with ties to the Chinese military, and a ban on new investments that would take effect in August, followed by a one-year period during which current investors could divest. And so there definitely is a continuation of the arc of Trump policy. This is not an area where Biden is showing a lot of daylight with his predecessor.
Kathleen, thank you so much. Bloomberg's Kathleen Hunter giving us all the latest on China and the Biden administration. Now let's get a look at some of the stocks that are moving in the pre-market trade. Despite the fact the benchmark is going nowhere fast, we still have plenty of action. Look at what's happening with Pershing Square Tontine. So this is the SPAC, of course, that Bill Ackman is now buying 10% of Universal Music Group. It looks like investors not a fan. You have to remember, this was one of the biggest amounts of money raised for a SPAC, and this is going to be one of the biggest deals for a SPAC, and they're not even buying a whole company, just 10% of the company. The rest of it gets listed on Amsterdam. Let's switch it up and look at some of the other pre-market movers as well. We have Workhorse as well. This is a Reddit favorite as well. And if AMC is falling, then looks like we're going to have some of those other Reddit favorites falling. This is actually an electric truck company pre-production, and here's AMC, as I was talking about, that huge share offering. They basically have increased their amount of shares outstanding by 100 times. I mean, it is absolutely mind-blowing how dilutive it has been for AMC. Some of it is necessary, trying to raise more money to avoid bankruptcy. This latest round really just capitalizing on this breakneck speed rally. And I just want to say, in their latest share offering, the risks they put in there, they have to list the risks. They say, we caution you against investing in our A-class stock under the current circumstances, unless you are prepared to lose some of or all of your investment. AMC here, Fran, saying basically, please do not buy our shares. It is risky.
Yeah, and there you go. On the back of that, it's down some 6.9%. It's been, pretty volatile, to say the least. Now, coming up, Ian Hartnett, Absolute Strategy Research Chief Strategist. We don't know if he's enticed by free popcorn for AMC or not. We'll ask him, maybe directly. And then a little bit later on, the Biden administration's view on the U.S. jobs report. We'll speak with U.S. Labor Secretary Marty Walsh. This is Bloomberg.
Eric Schatzker. Join me for my front row conversation with Canyon Partners co-founder and co-CEO Josh Friedman.
You've got big portions of the equity markets that are in business just to make acquisitions. That's what private equity firms' business is, making acquisitions and then selling companies. And when people make acquisitions and they use debt to make acquisitions, there will be mistakes.
Catch the full front row interview with Josh Friedman this weekend on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix and Danny Berger in London. Kaylee Lyons is off today. I want to take a quick look at the expectations for the big jobs number today. We've all been waiting for this all week long. Traders have been sitting on their hands. And the interesting question is going to be, what happens if we have a big miss? Obviously, it was one of the biggest misses of all time last month. Well, it turns out that bad news is back to being good news. You may have expected this. You may have seen it happening already. But what we see is markets are reacting positively to negative surprises because, of course, they expect the Fed to continue being helpful. This used to be called the Greenspan put. I guess it's been called the Bernanke put and now the Powell put as well. In any case, let's bring in Ian Hartnett to talk about it, Chief Investment Strategist at Absolute Strategy Research. Ian, what happens if we have another big miss today? Would investors just be happy because the Fed's got their back, or would it signal something is really wrong?
I think, what you'd be looking at is a situation where those bond yields would probably continue to trend down as they've, done over the last week or two. And I think that would be something that provided some supports for some of these big growth stocks that have been helping to drive the market over the last year or two. But I think the bigger question is, is that signaling that economic growth is slowing? We've had some of the money supply numbers coming down. But, our view is that would definitely still be temporary. The longer term picture is one where fiscal stimulus and monetary stimulus is still there, and we're talking about 10% nominal GDP growth in the final quarter of this year coming up for the US. So I think that any of these concerns you would have about a slowdown would probably be fairly temporary, Matt.
Ian, when you look at, good morning from London, when you look at, the U.S. jobs report, so what can today actually tell us? Because you have a lot of people coming back to the workforce with maybe lower paid wages because the economy is reopening, does it really give us a good indication on wage pressures?
Yeah, I think that will be one of the biggest questions, which is this is such a volatile period that we're looking at. Those questions around participation rates, the questions around the distribution of wage growth. We've had some really strong wage numbers in those employment reports over the last year. Now they're going to potentially be a very weak number that's being forecast for this month. So I think there's going to be a lot of uncertainty here. And it will really take a very consistent set of numbers, one way or the other, I think, to move the bond markets sufficiently. Because remember that the Fed are going to pretty definitely stay on hold. They've told us they want to be on hold. So the front end of the curve isn't likely to do very much. So it's all going to be action in the long end of the curve that's going to be where investors will be looking at today to try and judge some of those impacts. But, when given the numbers that we've had already this week with the ADP numbers and also the initial claims numbers, it does seem as though the market's looking for some stronger numbers already. So, potentially, the risks here could be if there's a disappointment, that might be the bigger impact on markets, I would have thought.
Ian, where's the pain trade right now? What is going to give the maximum amount of hurt to the most investors? Is it going to be a reaction of higher yields or lower yields?
I think that the pain trade remains, on the upside. I think, the economics profession, the central bankers are convinced that this is a transitory inflation phenomenon. And, we've seen bond yields peak out, over the last month or so, around current levels. So I think that the bond market is still, the biggest risk here is that if bond yields go up, and go up aggressively. And for the equity market, you know, you've been talking about the Reddit investors, the private investors, very heavily skewed towards bull market conditions. You know, equity investors, I think, generally, you know, have been pretty positive given the type of things we've seen moving in the markets, the financials, the more cyclical areas. You know, those are telling us that the people are still geared up for a positive outcome. If there was a big rise in these unemployment, in the employment numbers, big rise in bond yields, and equities came off on the back of the fear of inflation, that would be the biggest pain trade here, even though it's the thing that people are talking about a lot.
Ian, I don't know whether you follow AMC or any of the retail investor stocks, you know, the meme stocks that we're actually looking at, but how difficult is it to keep up with these sorts of things?
Well, I think it's very difficult. I think that, you know, for the investor, the professional investors, you know, I think there's the broader theme, which is one of the things that we've been talking about, which is that the amount of liquidity that is being handed to retail investors, you know, savings rates in the US, you know, are in double digits, about 14% at the current time. We've seen over the last year margin debt increased by $350 billion, and that was just on the $600 checks. You know, we think that those $1,400 checks are going to mean greater interest in these kind of meme stocks, retail investing. And in the past, when you've seen this kind of excess liquidity come through, both from the money and the fiscal side, that's tended to be very explosive for equities. So this is one reason why we are still bullish, and we still think there's more upside for risk assets here, Francine. You know, which ones it'll be, I think it's very tricky, but, you know, watch out for the broader trend, which is higher equity markets, more inflation pressure, stronger economic growth, and better cyclicals doing well here, and tech underperforming actually in that environment.
Ian, thank you so much. Ian Hardner there, and have a happy weekend after the U.S. job. Weekends officially only start after that economic data. Chief Investment Strategist there at Absolute Strategy Research. Now, coming up right here on Bloomberg Surveillance, we'll get the view from Morgan Stanley Chief U.S. Economist Ellen Zentner. That'll be interesting to see about price, wages, and, of course, inflation expectations. That interview, 7 a.m. in New York, 12 p.m. in London, and this is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley. It's a management shakeout, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
A capitulation phase is buy.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacroix with Matt Miller and Danny Berger. Kaylee Lyons is off today. Now let's get straight to the Bloomberg. First word news, and President Biden is turning to taxes as a way to get a compromise structure or agreement on infrastructure. The president has pitched to Republicans the idea of a 15% minimum tax on U.S. corporations. For now, the president is setting aside his proposal to raise a corporate tax rate from 21 to 28%. And big investment banks are having a hard time persuading traders to leave London for jobs in Paris, Frankfurt, and other cities in Europe. When JP Morgan asked a team of about 15 London-based equity derivative traders to move to Paris, about half of them quit because of Brexit. The EU insists that more assets, people, and business must move from London in the coming years. I have to say, Matt, one of my favorite games, usually on Saturday evening with my husband, is where would you move to if you had to?
Togo?
Good choice.
I mean, somewhere sunny. I'm usually thinking of islands, but I'm not sure the finance jobs are moving there.
Charlie wants to move to Jersey,
model.
I would guess, right? Or the Isle of Man.
Yeah, probably. Yeah, for the sailing. Yeah. Coming up next, we'll talk about the economy with Carson Bretsky from ING. This is Bloomberg.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix with Danny Berger and Matt Miller. Katie Lyons is off today. Matt, it's all about the U.S. job, but it's going to be a tricky one. So the last jobs data that we had was actually the worst since records began. But because we suspended the economy for the last 12 months, it's actually quite difficult to see what you're looking inside the nitty-gritty to actually understand what kind of economy you're left with.
Yeah, the worst miss, we should point out, because we still added, a few 100,000 jobs last month, but it was a big miss from the survey number. Today, it looks like the survey number, well, first of all, it's much lower. We were expecting 1 million jobs last month. Now we're expecting 674,000. But the whisper number is much higher. So if you type WHIS in the Bloomberg terminal, and I'm always promoting this function because I'm a gambler, naturally. You can put in your bet as to what the jobs number is going to be and try and beat your peers. Right now, the whisper number is 800,000 on the Bloomberg terminal, so it looks like the market is expecting more.
We should have a little surveillance early edition bet. We'll do it offline and then put it out on Twitter. Danny, how's that playing out in the markets?
Well, look, I think part of the reason that whisper number is higher is because of yesterday's ADP figure, right? You kind of have to adjust after that looks really strong. But guys, another fear that the market is going to have to deal with is this blackout period we're about to enter with the Fed. They're not going to have a lot of communication from here on out. So if we do get a really strong number, we get some sort of surprise there, action to course correct it, it's really limited at this point. So it makes sense if you're a trader in today's market that you might want to just sit on your hands and wait to see what the number is. And that's what we're seeing today. Barely a move in the S&P 500 futures. We do have a stronger dollar. Again, a lot of that is because of that whisper number you pointed out, Matt, that is moving higher. So we have the ability to price in a little bit of a stronger dollar here. Oil, though, can continue to gain despite the fact that there is strength from the dollar. Always notable when those two move in the same direction. We have oil trading around a 2019 high, and Bitcoin, of course, the asset that can't break up with Elon Musk, even though he is breaking up with Bitcoin. That cryptic tweet he had overnight with a broken heart emoji referencing Linkin Park lyrics has everybody upset. He doesn't like Bitcoin. It, of course, is sending it lower. So what happens when Bitcoin moves lower? It means the pre-market movers are, of course, going to be crypto stocks as well. So let me show you some of those. We have Riot Blockchain down nearly 3.5%. It's Riot Blockchain, it's Marathon, it's Coinbase, all of them looking extremely weak today. We also have DocuSign on the bottom here reporting earnings very strong. They're that company that if you want to sign something electronically, they're going to support the platform for that. And Ford, huge amount of sales for their electric vehicles. Matt, they have sold more electric Mustangs than the gas-powered Pony. I mean, I know you're looking for the F-150, but maybe you need to consider an electric one.
Well, I'm not going to, but that is a car that a lot of people love. It's the Mach-E. I think it's very smart. They're starting a Mustang brand. And they're also coming out with a new truck. I follow one of the flacks on Twitter, Mike Levine, or on Instagram. I think on Instagram, and he pointed out yesterday they're dropping a new truck in a couple of days called the Maverick. So I'm excited to see what that is going to look like. I have a fantastic chart put together by my erstwhile producer, Hillary Clark. And what this shows, I'll walk our radio listeners through it, is the average hourly earnings growth or contraction that we see during this recession. This is where everyone's going to be paying a lot of attention. And the first thing that I noticed about this chart, Hillary always shades the recession areas in red, which is nice. The cool thing is you look far back, all the way back to 2014. 2014. It's been a long time since we had a recession. We were well overdue for this recession. The average recession, by the way, lasts about 11 months, so it's time for it to be over. But you can see average hourly earnings here in blue down so hard compared to the growth that we were seeing before this recession. We want to see that bounce back. And then in white here, you see the Atlanta Fed wage growth tracker. It's not down as much as the BLS numbers. So maybe that's a sign that the BLS numbers don't measure this 100% correctly. Not all of the statistics that we give you really tell the true story, Francine.
Matt, I think we have to agree that just Hillary Clark smashes the charts game.
I would agree, too, with that wholeheartedly.
She's on point every time. Now, economists and policymakers were surprised by April's weak U.S. jobs report, only 266,000 new jobs, well under estimates of 1 million. Since then, there have been indications of a turnaround in the labor market. Bloomberg's Jill Schneider reports.
In the wake of April's disappointing data, there are indications that the U.S. job market is already tightening. Weekly initial unemployment claims fell to the lowest level since the pandemic began.
Of course, there are people who are on the sidelines who are getting generous unemployment, and they say, look, we know this is going to expire in 3 or 4 months, and I think and they're individually saying, we think the job market's going to be strong in 3 or 4 months, so why don't I just wait?
McDonald's, Chipotle, Under Armour, Bank of America, Target, Costco, and Amazon have all boosted hourly pay rates in recent weeks while announcing thousands of new jobs. This trend may force the Fed to re-examine its commitment to a looser monetary policy, whether to treat this as a transitory moment in the recovery or a structural change to the economy. Labor shortages are also a concern in Australia, where the government is offering incentives and travel bonuses to move workers quickly into open jobs. While in Europe, coronavirus travel restrictions have disrupted efforts to meet a surge in demand for specialized workers, blunting the impact of massive monetary and fiscal stimulus.
Well, joining us to talk about the jobs data is Carsten Brzezinski. He's chief economist at ING Germany. Carsten, always a pleasure to have you on Bloomberg Surveillance Early Edition. What kind of wage growth are you looking for? So presumably there's going to be a lot more hiring of people that work in hotels and restaurants as the economy reopens. Will that push prices down?
Well, I think it will push wages up, but I think we have to look at the sectors. So like you said, we will see wage pressure in sectors, in the hospitality sector, in retail, but it's going to be temporary because we know that the stimulus package, the checks, will end by the end of September, and this will then be a totally different situation. So I'm a bit hesitant when I look back at the U.S. labor market pre-corona, pre-crisis. It was also at record low unemployment rates, and we didn't see any wage pressure coming up. So any wage pressure that we're going to get now sectorally will be short-lived, in my view.
But it seems that labor market conditions.
Sorry.
It seems that labor market conditions are really pretty much fast improving, Matt. So that's probably also your point, right? And it goes back to kind of the chart that you were doing, Matt.
Labor market conditions are improving. Obviously, they are, and I think we should be prepared. You had the whispering on the non-farm payroll data that we're going to get later on. I think yes, that could be a clear positive surprise, given that we had the April disappointment and also a downward revision for March data. So with the reopening of the economy, the labor market will improve very, very quickly. So the question is now, what is transitory, what is temporarily, and what is going to be structurally? And when I look at the participation rate, for example, in the U.S. labor market, it is still relatively low. So the big question will be, when we now have these labor shortages, can other sources be tapped? Could it be migration? Could it be people staying at the sidelines already pre-corona? So these things will matter to determine whether any wage pressure could be longer than only for the next couple of months.
Now, when you look at inflation, Carson, we see, for example, food inflation at the highest level in a decade. Danny was talking about the new Ford Mustang Mach-E's. Those are going for like $10,000 more than the sticker price off the lot. So you see cars prices rising. Home prices are just, off the hook no matter where you look. But is it all about wage inflation? Is that what you're saying?
For the central bank, it will be all about wage inflation. I think that is what the Fed has communicated. And even here, I would argue that the Fed would tolerate some wage inflation if it was mainly concentrated in the low-wage sector, because this is actually what the Fed would like to achieve, seeing wages in the low-wage sector increase. You can have doubts whether a central bank can do so much micromanagement, but it will be about these second-round effects, because there is very little that a central bank could currently do, at least when they will not be able to stop the shortages in semiconductors. They will not be able to stop higher commodity prices. So they will have to watch out for these so-called second-round effects. If they appear, then I think the central banks, both in the U.S. and but also in the Eurozone, probably 6 or 12 months later, they would have to intervene.
Carson, does the Fed matter less now? Do central banks matter less as the world economy relies more and more on fiscal stimulus? It seems like we've entered a new paradigm with this much spending out of governments. Does monetary policy matter less?
I think for growth, you're fully right, Matt. For growth, it is more fiscal, which matters, which makes the big difference. When I look at markets, it still is central banks and monetary policy that matters. Let's look at our discussion, look at how markets will react today to non-farm payrolls, how they react to a central bank communication. So to shape market expectations, it is still the central banks. In terms of the economies, I think this is really the decade of fiscal stimulus, of fiscal policy, of deficit-driven spending.
Carson, if markets care about the central bank, and of course central banks care about the data, obviously we're waiting with bated breath for this jobs number data, but is it really going to have to be until September, October, those data points, when we move away from the base effects, to really get any understanding of where we're going from here?
I think we'll have to wait until the end of the summer, Danny. You're fully right, because no central bank, neither the Fed nor the ECB, would react to a single or two single data points. That would be extremely naive. So we'll now have to really see whether these wage pressures will be transitory. In the US, we'll have to wait until the fiscal stimulus peters out by the end of the summer. And only then you could start talking about tapering. Obviously a very good central bank, and they will do, is already behind closed doors discussing on different scenarios. So how could a tapering look like? But communicating that to markets is only something for the late summer.
Carson, thank you so much. Carson Bretsky, their chief economist at ING Germany. Now coming up, Bitcoin 2021, what to expect from the largest crypto conference in history. That's coming up next, and this is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
People are getting ready to go on to ramen diets to buy Bitcoin at these levels. I think that, just everything that's happening in Miami right now, the excitement around the space is so hot. I think people just see this growing massively. So not worried about this little dip. We've seen this over and over. Crypto's a roller coaster. You got to be able to have an iron stomach to tolerate the ride. But, the gains are massive for those who can handle it.
Kraken CEO Jesse Powell speaking with Bloomberg yesterday. Let's get over to Mike McGlone, our resident crypto expert. He's a Bloomberg Intelligence commodity strategist who's been following this sector incredibly closely and now is down in Miami at the Bitcoin 2021, the largest crypto conference in history. So, Mike, tell us first about the conference. I mean, how packed is it? What's the atmosphere like with a bunch of crypto nerds all gathered in probably the hottest party spot in America?
Well, it certainly is that, Matt. And yesterday was kind of the press day. I was impressed with the number of people today. Today, I expect to get there early, so the quotas might be up to 50,000 people. What's unique about it, too, it's the first open conference on the planet where people are really there and not talking without masks and speaking in person. So there's a certain vibe here. But, of course, then you have all the crypto types, so they're very positive. But the unique thing I really found out about yesterday, there's so many do-gooders here. There's people here just out to make this planet better. And I met a few of those. We had an interview with Brock Pierce of Bloomberg Television, and there's so many other. One thing I really did meet a lot of were the miners. The miners were pointing out how beneficial mining is to regulating grids. Like I met one power supply person yesterday, said, hey, we had extra power supply. We're not big crypto people. We started using Bitcoin to mine to make up to regulate that excess power supply.
Mike, how much are they talking, in the corridors about Elon Musk and his love-hate relationship with crypto?
Good. I thought that'd be a good subject to bring up just to get a conversation going so people could knock him. But I think as of this morning, the subject will be coming up. I didn't hear much of it yesterday. What I did bring up a lot was Ethereum, because it's a Bitcoin conference. And Ethereum's been one of the best performers this year, and it's actually a stalwart of the space. Bitcoin's been kind of a dud. And most people I spoke to said, yes, I agree. Ethereum's great. But we have to be careful of saying it too publicly because the promoters of the group really want to talk about Bitcoin. But, Bitcoin, and I asked all the miners, they said they only mine Bitcoin. So the focus is really Bitcoin. Haven't heard much about Musk yesterday, but I suspect today he's not going to be the favorable name to mention.
Okay, so talk about Musk, or a little bit, mostly talk about Bitcoin. Mike, what about some of the joke cryptocurrencies like Dogecoin, Kanye, of course, the Kanye West cryptocurrency? Is this a topic of discussion, or is it kind of awkward in terms of trying to talk up the legitimacy of the asset class?
Exactly the latter, that people do not want to. They think these kind of joke coins bring down the legitimacy of Bitcoin, becoming the global digital reserve asset and changing people's lives. So a lot of the quotes I heard was, this Bitcoin is going to bank the unbanked. And 2/3 of the world is still unbanked, and 40% of those people have cell phones. So that's where it's going. And so I haven't heard much mention of Dogecoin, but most people here are the type of Bitcoin people that they would never sell their Bitcoin. And there's a lot of people here that don't care about the price too much. They're in the business. Like there's prime brokers, there's people who provide the custody, and the miners. So it's just amazing the trickle up and trickle down of related businesses I've been meeting and seeing.
Mike, thank you so much for all of the insight. I know you'll fully keep us up to date with what's happening in Miami. Bloomberg Intelligence is there, Mike McGlone. Now, in the last 2 minutes, I think we have some breaking news out of Facebook. We understand that Facebook's being probed by the EU and the UK antitrust authorities. Now, remember, this was something that the Commission already announced a couple of weeks ago. It does seem we have a great story on the Bloomberg now explaining exactly what's going on. Facebook, I think, was one of the last, giants, tech giants, not to have some kind of formal investigation into its classified advertising service, and the EU now really targeting Facebook, as well as regulators are opening some of these investigations to understand exactly what's going on. So we'll have plenty more on Facebook and some of the tech regulation that could be coming shortly. Then, coming up, where will retail traders look if meme stocks collapse? Well, we'll get the view from Financial Insights President Peter Atwater. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If we see this price rise bubble, collapse, then I think we run the risk of the crowd deciding that the real money to be made is on the short side. Or even more significant, particularly for policymakers, is the risk that they move into the commodity space.
Peter Atwater there, Financial Insights President. Now, for more on that interview, you can catch Wall Street Week tonight at 6 p.m. New York time. Now, we're joined by Tom Keene, always entertaining, especially on U.S. Jobs Day, co-anchor of Bloomberg Surveillance, who joins us. And Tom, I'm excited about your guest.
Well, it's going to be good. We start strong with Randall Krosner. He's in London, of course, out of Booth School, Chicago, and that'll be on the financial aspects of this labor economy. A lot of dynamics there as well. On to Ellen Zentner, and I'm thrilled to say we close out ever stronger. We believe in the 10 o'clock-ish moment, the Secretary of Labor will join us. This is maybe the most important conversation I've ever had, Francine, with the Secretary of Labor, because what this jobs report is about is, yes, the countable jobs, but just as importantly, the wage dynamics.
Right. And the wage dynamics we know will change because it's more people coming into the workforce with lower wages just because the economy is reopening.
That's
right?
Yeah, that's one of the dynamics. But I would say mostly, and Neil Dutta absolutely nailed this in a research note we'll feature here in about 10 minutes, is this distinction between hours worked and new jobs. And basically his thesis is there's a lot of people working long work weeks right now as we unravel from this natural disaster.
Tom, with a very dapper bow tie today, especially for U.S. jobs, is there, a single best chart that we should be looking for?
Oh, the single best chart, let's bring it up right now. I mean, it's real simple. It's labor participation. Michael McKee makes a big deal about this. I think Secretary Walsh will as well. The miracle of women into the workforce over 30 years, a peak. Down we go with the disaster of the financial crisis. And there is a grudging recovery that we have seen before the pandemic. And we're only halfway back to where we were in February. We have a long way to go to a fully employed America.
Yeah, we certainly do. I'm looking forward to discovering the U.S. jobs numbers with you, Tom. Tom Keene, co-anchor there of Bloomberg Surveillance. Now, this is a look at what else we're watching. And Danny, you're all over the U.K. travel news because it's unclear where we can travel from the U.K. at the moment.
Right. Well, we know that we can't go to Portugal without coming back and quarantining. And from here, that June 21st deadline of easing social distancing measures in the U.K. is really under question. So today, we have data about the spread of the newly dubbed Delta variant. That's, of course, a variant first identified in India, and the UK's R rate. And I think from here on out, these data points are going to be so important, not just if you live here and want to travel, but also if you participate in UK markets, Matt, because this has really slammed these travel things as well. But of course, Biden's tax plans also going to be important for this market.
I love that we have now got PC names for all of the variants because nobody wants to connect them right to a country. I know this because my wife is from Spain, and she hates it when I talk about the Spanish flu of 1918. She always reminds me that it started in Kansas. Yes. In any case, I think it matters so little. But what matters more is corporate taxes. Fran and I always in agreement on what to do about corporate taxes. President Biden was thinking about raising them to 28%. Yesterday, we got breaking news that the administration is considering, well, this is globally. I'm just talking about U.S. corporate taxes. But there's a look at global corporate taxes. In the U.S., he's now thinking about making a deal with Republicans to put a 15% floor instead of asking for an increase in the rate to 28%, which I don't know if that's a great trade for companies in America because they wouldn't be able to pay less than zero with deductions.
Matt, you and I are always in agreement on everything. So that's the premise of the show. And then we can talk about, of course, tax and things like that. I'm looking at Facebook now. Just moments ago, it joined this exclusive club of European big tech targets as regulators are opening formal investigations into its classified advertising service. And actually, it's the first time that they escalated a case into Facebook beyond the preliminary stage. So we'll look at that as well. Happy Jobs Day. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
The Fed needs to stop fixing to do something and actually do something.
It's hard to have much of an inflation problem if wages are still quite quiescent.
Since the pandemic, my argument is the Fed is changing policy.
Regardless of what the Fed does or does not do, the U.S. economy is going to grow somewhere 6, 7, 8% this year.
2022 is going to be a year of deceleration. The economy is going to be strong, but it's going to be growing slower.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. It's a simulcast on Bloomberg Radio, Bloomberg Television, and it is Jobs Day. Joining me, Matt Miller this morning, and Taylor Riggs wanders in early this morning. Thrilled to have Taylor with us as well on a Jobs Day. And I would suggest, Matt Miller, the entire world looks on America after what we witnessed 30 days ago.
Yeah, absolutely. The biggest negative surprise in history. Now we're expecting a slightly smaller number. I think the survey is for 674, but the whisper number continues to climb. If you check out that function on your Bloomberg terminal, WHIS Go, you can see that we're now at 800,000. I love that function, Tom. So it'll be interesting to see what happens today. I wonder what would happen if we had another big miss.
Well, that's exactly right, and that would be a value add there for folks. We'd never get that from John Farrow. I mean, Miller just crushing it with the terminal knowledge. Here's what you need to know. The survey in the last day, off of what we saw yesterday with claims, off of what we saw with the ADP report, has gone from 655,000 out to a new survey statistic of 674, and Mr. Miller talks about a number of 800,000 as well. Taylor Riggs, how do you frame this Jobs Day?
My favorite research note that I read is that the inputs are so sensitive, Tom, that the outputs could range from 0 jobs to 1 million jobs based on one little sensitivity of the input. So it certainly is perhaps maybe the inputs that are creating the outputs. And it is a wide range, and we await after that April number what we get today in terms of May.
It's a huge wide range as well, and of course the market's wrapped around this. Taylor, I know you were looking at this on the close last night, and very importantly, the market has shifted, folks. It's very important to go on a 4-day work week from the compression of a correlated Tuesday into the mess we saw, the stew rather, maybe of Tuesday and then Wednesday and into Thursday. And today, Taylor Riggs, when I look at the market very briefly here, I see a market pricing in that whisper number Matt Miller's talking about.
You know, Interesting comments, of course, around the magnetism of a 10-year yield around a 162. We've been talking so much about this range bound of a 160 to a 173, but it's 160, 162 that's been holding in there, Tom. Despite yesterday, the better than expected ADP, the jobless claims, you're sort of getting that inflationary, reflationary feeling, and yet it is the magnetism of a 162 that remains today.
Well, let's start with that on our data check here this morning, and I want to bring in the real yield as well, the inflation-adjusted yield, because that has moved as well. The 10-year yield, as Taylor mentioned, it's 1.63%. The real yield has moved decisively, a negative 0.88, call it, into negative 0.82. That's a lesser negative statistic, and to me, that's a big deal, Matt Miller, that we've seen that real yield shift. And Matt, Brent crude still rounded up $72 a barrel.
Yeah, Brent crude and NYMEX both at pretty high levels, although I remember quite well just a decade ago when we were looking at 146, 147, and I believe the Saudis still need a little bit more to balance their budget. So even with these levels, I think that OPEC Plus wouldn't mind seeing it climb a little higher.
Mature into the markets in the equity space as we look cross-asset, red and green on the screen. The VIX 18.09, and that's center tendency between the 19 level and the 16 level, and really an odd week. Looking for data, and we'll get that data at 8:30 as well. We need a view forward. This is a view forward on the American labor economy. I'll be speaking with the Secretary of Labor near the 10 o'clock hour. Taylor, what do you have?
It is the only thing that we care about today. It is 8:30 a.m. that U.S. May payrolls report. That is the only thing that we are counting you down for. And then, of course, 9:55, John, your U.S. Tom, I should say, your U.S. Labor Secretary Marty Walsh interview. One of these days, I'll figure out the difference between Tom and John. And then finally, Tom, of course, 10:15, we're going to hear from President Joe Biden, of course, on
statement almost in this pandemic, all the different dynamics that we see within our financial system and our economics. That is a perfect segue into the former governor, the Federal Reserve System, Randall Krosner, joins us now, the Booth School, Chicago, ensconced, I believe, in London, where he's been for many months. Professor, thank you so much for letting us start strong on this Jobs Day. As you see this labor economy and the battle of our politics as well, how close are we to fully employed?
So we're not there yet. We clearly have a very strong labor market. Even though the print last month was for a low number of jobs, it's clear that we have lots of reports of labor shortages. We see that in the Fed Beige Book. We see that in just talking to business people. It's a strong labor market. We're recovering very quickly, but a lot of people aren't coming back into the jobs market. Part of that is because they've just decided it's too volatile, it's too risky, I'm going to stay out. And part of it is they're getting some very good benefits that eventually will fall off. So I think it's pretty tight. And I think the thing to focus on will be what's happening with wages. Exactly as you guys were discussing, the numbers could bounce all over the place, and it could be lower because of supply constraints, it could be higher because of high demand. But I think we have to look through that and sort of see what is the wage pressure that's coming in. I think that's really going to be the key.
You know, Governor Krosner, a very careful and scary course at the University of Chicago is economics for liberal arts majors. It's just, it's a frightening event to see. And I'm sure what you're doing in economics for liberal arts majors is underscoring the complexity of our labor system. Neil Dudd at Renaissance Macro absolutely nails the key distinction right now is, are we seeing a longer work week or are we seeing more jobs? At some point that flips to more jobs, doesn't it?
Yeah, I think, and clearly if you look at the number of job openings that are out there, it's enormous. There's been an enormous increase in that. And we're also seeing that people are willing to quit their jobs. They only quit their jobs a lot when they feel pretty confident that they can get another one. And so I think there are lots of job openings out there. There will be lots of opportunities for people. It's just, are there enough incentives for people to come back into the labor market?
What do you think of this paradigm change that we're watching, Randall Krosner, in terms of the shift from monetary policy over the last 40 years, from the Reagan-Volcker era to this new era of basically MMT? It seems that the freshwater economists have all been drowned in salt water here. There's no more trust in free markets. There's no more real business cycle. There's no more monetarism. What's the point then of the Chicago Booth School?
I'm not quite sure that we've been drowned quite yet. I think there's still a lot of belief in the power of markets and the value of market economy. I mean, that's a lot of what's driving the recovery. Think about what happened during the pandemic. It was the innovative sectors that were allowing people to get food, to get the things that they needed. So I think that's still a super important driving force. Think about the creation of the vaccines. That was very much a market-driven phenomenon. So,
but Professor, we're going to run up debts of 120, 130% of GDP. Is that concerning to economists in America?
Oh, for sure. That's a separate issue. And so I think that's a very important one. It seems that there's a desire on some people in Washington to kind of supplant the private sector investment with government sector investment, with private activity with more government-sponsored activity. That is a real challenge. And I think there are many economists, not just in Chicago, but throughout the country, who are very concerned about that, concerned about the burden that we're putting on future generations. Somebody's got to repay this debt, and that's going to be the future generations.
And Professor, we've increasingly heard that there's no amount of tax increases that can cover that. And so you do have to bring in the private sector to help fund some of the public investments. Do you see that as a realistic possibility?
I think that's extremely important, and I think that's extremely valuable. And so we can have good public-private partnerships, like the one with the so-called Operation Warp Speed, which helped to allow Moderna, who had never produced a vaccine before, now to be producing perhaps 1 billion vaccines this year. So there can be valuable public-private partnerships. There can be valuable aspects of government spending, but you've got to be careful to make sure that it has payoff, because if it doesn't have payoff in helping to grow productivity and helping to grow the economy, it's going to put an unbearable burden on future generations.
Governor Crosner, I want to go Chicago on you, and that is over the financial integrity of the system. You're one of our great voices on this. I know you're on your laptop at some shishi cafe in London, day trading AMC or GameStop. Randy, what in God's name does this mean for the system? I mean, you and I are making jokes about this, but you know a lot of money's going to be made, a lot's going to be lost. Regulators are clearly doing next to nothing on this. What's the impact of this on the trust in the bid and the trust in the ask?
I think it's a super important question, because the integrity of the markets is crucial, and we've seen a lot of newcomers into markets, and we've seen a lot of coordination of those newcomers in markets in ways that we hadn't seen before, people using technology. So regulators need to be aware of that, and market participants need to be aware of that. Greater volatility, and we want to make sure that markets function well. We don't want sudden stops of trading, that where people feel that they are not being treated fairly and other people can get in and out and they can't. And so I think that means a regulatory rethink for the new era, where there are a lot more people coming in and people coordinate in ways that they couldn't before. So the little guys all working together can be much bigger than and more important than the traditional big guys.
Professor Crosner, well, we'll have to leave it there. Professor Crosner, thank you so much for joining us today with the Booth School at the University of Chicago, and of course his public service as a governor of the Federal Reserve System. Futures at -1, down futures at -44. I'm going to call it a very quiet red and green blinking across assets on my Bloomberg terminal. I do note the real yield definitely does better, as we did the survey numbers improve off the economic data yesterday. We will go through the jobs report. We'll go beneath the headline data at 8:30, and then near the 10 o'clock hour, my conversation with the Secretary of Labor on labor in America, on rising wages, the fear of small business that they can't afford those higher wages. Stay with us through Jobs Day. This is Bloomberg on radio, on television. Good morning.
With the First Word News, I'm Rishka Gupta. President Biden is turning to taxes as a way to get a compromise agreement on infrastructure. The president has pitched Republicans the idea of a 15% minimum tax on U.S. corporations. For now, the president is setting aside his proposal to raise the corporate tax rate from 21% to 28%. Traders are waiting to see what the new U.S. jobs number is like. The May unemployment report is out at 8:30 a.m. New York time. According to a Bloomberg survey, the economy created 674,000 jobs last month. Economists had forecast a big number for April. Instead, employers added just 266,000 jobs. And European Union regulators have opened a formal investigation into Facebook. They want to know if the social network violated competition rules by using data gathered from advertisers to compete against them in classified ads. Facebook says it will cooperate with the investigations to show that they are without merit. China has started a war on commodity prices that Goldman Sachs says it can't win. Surging prices of raw materials threatened to derail China's recovery. Over the last 3 weeks, policymakers have unleashed a barrage of rhetoric and administrative measures to rein them in. Prices of coal have fallen as much as 22% from their highs in May, but Goldman Sachs says global demand will overcome attempts to stop that rally. Vivendi is in talks to sell 10% of Universal Music Group to a blank check firm backed by billionaire Bill Ackman. A deal would value the world's largest music company at more than $42 billion, including debt. Vivendi plans to spin off most of its UMG later this year and list it in Amsterdam. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're